Oh, we are live. 8 seconds in. Sorry about that. Shake my hand, 365. Good afternoon to evening. Hope all of you guys are doing well. Sorry for the delay today. Can I just quickly get a mic check? Please, can I get a quick mic check? If you guys can hear the mic, let me know. Anyone watching live, just need one person to mic check me before I start talking and talking and talking and no one can hear me. Is it okay? Is it too loud? Am I clear? Hope all of you guys are doing, fantastic. Really cold where I am, really cold where I am today. I'm just waiting for any type of mic check. And then if I don't get one, I'm just going to assume you guys can hear me or someone will confirm as soon as they jump in on the live, But yeah, hope you guys are doing absolutely well. Markets have been, interesting, I think, to say the least, with the beginning of the first 10 days, or rather the first trading week of the second financial quarter. And it won't happen in this war room, but we need to do a quarter to quarter analysis, right? So you guys can really get that flow of money understanding. But it won't happen today. In today's war room, we're running a little bit behind time because of me and my personal stuff I guessed over. That's problem number one. And also number two, there are a couple of chats that we need to kind of like talk to. Clear. Right. Thank you so much for the mic checks. I appreciate all of you. Thank you so much. And good to see all of you. Right. So there's been a couple of things going on in the markets. And maybe I'll do that quarter to quarter analysis because I have to do it for myself. Right. So it'll really be beneficial if I record myself and I talk you through everything. Really, because it's fascinating how every time you learn something new in the markets, but also at the same time, markets really don't change that often, right? So you actually learn something about yourself, about your analysis, and I find a quarter to quarter view always helps, right? So we're going to kickstart, guys. If you check the description down below, I've already put in the assets I want to look at in the way I've planned them, and that's because I want to trade those specific assets, or at least it's time for me to rotate back into those assets. I don't have as many swing trades on the table right now. I've been very busy for the last 2 weeks. The Wealthy in 3 Years program financial notes are finally out, right? So hip hooray. And now we're working on moving everyone, this week and next week into the new learning platform where we'll roll out our module 3, module 4. There's just a lot of things going on, which are good. And then maybe, I can finally fulfill my promise to the trading community. I did say I was going to give 4 good trading modules that you could use for the rest of your life, right? And these war rooms, once again, are important. Last week war room, I demonstrated how we only had 1 losing trade in the month of March. And that's if you follow my instructions and you take only the trades that we plan together. There's a whole video about that kind of stuff, bearing into NFP, etc. And this week I want to do the same thing again, but not in great detail because of time. I'm just going to look at so this War Room 62, I think, right? So all you have to do is go back and watch my video last week, Sunday, War Room 61, and you're going to go through the assets by assets. You start putting chapters, right? But you'll notice that we spoke about AUD NZD in last week's video, AUD NZD. And last week's War Room was on Sunday. Sunday was the 3rd of April, right? So everything is dated. You can actually have a look and see clearly. But AUD NZD is right in front of us. I can find the 3rd for you. The 3rd would be the Sunday where we last analyzed this asset. And this is where price was on the 3rd. Somewhere here. 1, 2, 3. Somewhere there, right? So that's the 4th, that's the 3rd. So all we had, if you really think about it, is all we had was this type of candlestick play. Because remember, we can only judge an asset based on its past, right? Past and present. And that's where our job is then to make that speculation into the future. So there's nothing more than this. Right, and I spoke about how this yellow zone might be a good selling place, but it's short term. Be very careful. I elaborated, and why I'm not that excited, because I want price to push up to the upside, right? And you had 2 days of selling. Intraday traders, that's good money for you. But as a swing trader, this is why I say, I've been looking to kind of like, see a bigger push to the upside. And if you watch last week's War Room, there was a full, macro analysis on AUD NZD. It's the first asset that I looked at. I looked at this interesting triangle here, and I told you guys that for me personally, I think this thing is going to push to the upside, but when it gets to the upside, it's going to do this PCP structure, right, which I don't trust, especially now that we've got this sharp triangle pattern here, right? So my point is, if I do a war room, and I'll say it loud and proud, I didn't have a loss this week. I didn't have a loss this week because the only trades that I took are the trades I set up at midnight on Sunday after doing a war room like this with you. And so only those pending orders got triggered. Some are not yet triggered, but the ones that got triggered were profitable. The ones that I told you would be profitable, right? And so it's not that I'm always right or always whatever. It's simply to say, I hope you're tracking the value. The value of the war rooms is actually for you, not for me. For the most part. AUDCAD is another asset that we looked at last week. And I think it's important to spend time reviewing these things, not to brag about 365 analysis, but also to kind of like build credence and confidence in your trading. You're only confident in something that you trust. In trading, you only trust your strategy, given the amount of time you spend with it, right? We call that confidence, right? Back testing, all those kind of things, right? So look at this. I promise you, if I pull up last week's video, I don't know if we should do that, but I'm happy to do it. If you pull up AUDCAD, someone please write this down because I've got the notes. You pull up my war room from last week and you go to 1 hour on the dot, 1 hour dot 0013 seconds. You will see me tell you that I don't trust this particular sell level in AUDCAD. In fact, I'm very clear about it in last week's war room. I literally say to you, actually, this is going to probably become a liquidity rate. So if you put your stop loss at the right place, you are going to get chart. And there's the chart. This is what we had, when I was doing the analysis on Sunday last week, right? This is where markets were. Remember, the 3rd of April was the next day. So actually, we didn't even have this new green candle. So I said, look, man, this is deadly. Don't sell here. Rather wait for markets to pull all the way up here. See, this is where I drew the, this potential thing. But you just have to play it back. 1 hour dot 00.13 seconds on AUDCAD. I tell you that there's going to be liquidity rate in this zone. And therefore, I personally don't think it's wise to sell. And that's what, there we go, right? So if it sold here, your stop loss would have been hit. Yes, markets would have gone down. But if you're a sit and forget trader like me, you'd have not been around to mitigate this, right? You'd have been triggered and then stopped out and then markets gone down with you, right? And the reason for that, again, I'm not bringing this to kind of like glorify, my analysis or whatever. I'm saying as a learning channel, one of the main things that you need to quickly get through as a trader, as someone who's doing the 365 Trading Academy course, you need to know when to buy or sell. I get that. Because that's how you make your money, right? You're going to buy and sell, supply and demand. But, when you guys start to walk through module 3, I put more emphasis on the institutional perspective and your trading once again. So if you thought I went crazy institution on module 1 and module 2, module 3 teaches you these things. You also need to think about the fact that you're always the prey in trading, that your capital is the best price, that somebody in the world at every given second wants your money. So you have to look at these levels, and with AUDCAD, I can only do so much in war rooms, guys. Please, remember this. There's only so much time. Sometimes I want to go on for 3 hours, 4 hours, but I'm worried about people's retention and things to do on a Sunday night. But if you notice, if you go back to last week's war room, I highlighted this. I explained to you why a pattern like this looks very, 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 very enticing for supply and demand traders, but also why it could potentially betray us. I told you guys that these 2 red zones are good sell-off points, but there's no confluence, right? All of that is in last week's war room video, right? So obviously, I didn't take this trade because I told you the same thing. You'll see the same thing for people in the Wealthy in 3 Years program. I'll give them crypto coins and assets and stocks that might 10x, 20x, 30x, 40x, and people will only start to take them seriously when others are now posting results. Of course, that's good, but it's too late, right? A lot of trading involves, some risks, but everything in life is a little bit risky, right? This is NZDUSD. If you go to last week's video, 1 hour, 10 minutes into the video, I told you, I'm literally making notes of everything, right? The second and first financial quarter, I want to know, go back to really assessing our value. So we spoke about this area of value. I say, it's a good place to trade. Look at the order block. The orders are not really, drained. If you go back in time, you're looking for the 3rd. This is all we had, right? Markets were here last week, Sunday. That's the power of our analysis, man. And again, I'm not here to kind of like, do a supply and demand showcase, man, sorry, wrong. I really need to relink my accounts. Right, so I'm connected to the office, so that's why sometimes I get kicked out like that. Hurry up. Right, there we go. So this was Sunday, this is the first, this is the third. So all of this wasn't there when we did the analysis. And this is a good exercise, by the way, for those of you who are learning supply and demand and trying to master this thing. You'll always be poised with a scenario. Your job is to make money. So I spoke about these equal lows. I spoke about how they need to be swept. I spoke about the fact that I don't want to be buying at equal lows, even though that's what every single trader does, right? If you look at those W patterns and double bottom patterns, right? That's what retail traders are taught to do. What I want to do is to wait for money to come back up here and collect sell orders, and then we can rock all the way down. NZDUSD, last week's analysis, 1 hour, 10 minutes into the video, and price did exactly that. We're currently just above 1:3. So because it's a new week as a swing trader, I'll be locking profits or getting out. I've reached my 1:3. We've also reached these equal lows, right, with a very big red candle, right? So anything goes after this. Believe you me, there's a nice strong demand that's holding price up, right? So I should have closed on Friday, but I didn't. I was a bit distracted. But needless to say, if all you're taking, and this is not financial advice, again, I'm not saying what I don't want the war rooms to become is I don't want the war rooms to become your wheelchair, right? I'm simply saying if all you took were war room trades, your portfolio should be doing well over time. All right. If only, not because I'm always right, but I'm simply saying, I mean, what's the point of attending these things if you're not going to use these things? So if all you took were war room trades, your portfolio should have been a whole lot better. All right. But as a 365 student who's taken the course, I can only cover 10 assets in a war room, and half of those assets won't get triggered this week. They might get triggered next week. They might get triggered the other next week. So if you want to see growth, your job isn't to just ride the war room wave. Attend the war rooms, get equipped, get renewed, get confident. But you need to be casting your eyes on all assets like I do during the week. Because then the same principles we do here with 10 assets, you go multiply with 30, depending on your time, right? But that's the only way. People always ask me, how are you everywhere in crypto? How do you not go in commodities? How do you go in stocks? I'm a full-time trader. All I do is sit either here or in my home office in the other room or in my work office, and I look at charts and I make decisions and I move my money around based on that. But that takes time. We are simply here. You got the notes, the financial notes. Great, man. I'm absolutely excited about the notes I just dropped. Thank you so much, Alvin. Blessings, brother. So this is USD China yuan. The buy has been triggered. It's been a very slow, painful play. I mean, we're kind of like negative. Those of you who got in, we're negative for about 2 or 3 days. I know on Friday we closed up in profits, but not much has happened on this thing, right? Still a profitable trade, but not much money has been made. 1 hour, 19 minutes in the previous war room video. Then we had things like pound NZD, euro NZD. We were still waiting for perfect sell setups, right? Now, I just want to quickly just jump right in, guys, because of time, into today's stuff. And once again, no losses from last week's war rooms. None. A few items triggered, a few things pending. And all you want to do is accumulate. So hopefully today, we can map out a couple of things. I want to look at 12 charts. I don't know how realistic that is with the time that we have. But the first thing first, since I just dropped Wealthy in 3 years, financial notes, and I would really encourage every single one of you to get yourselves a copy of that, or rather to subscribe to the Wealthy in 3 years program. It's 50% off. It's $4 per financial note. It's absolutely ridiculous. Keeping things, price effective. Okay, so I think I wanted to bring this up in the video I made yesterday about 14x crypto tokens about to explode, which is what I put in those financial notes, right? And what I forgot to do in the video yesterday was to give you guys a full analysis, but it was supposed to be a short video. So let's look at Bitcoin. Number one, I absolutely need to take profit. I've been saying this for 2 days, and I still haven't taken profit on this final sell on Bitcoin. I mean, price could fall all the way down there. Basically, if you know me, that's been my prayer. That I've been covering, bear cycle markets in the stock market and in Bitcoin. And That's it. I love crypto, but as a trader, I want things to fall a bit low. As an investor who thinks 10 years, I want it to fall a bit low. I'm not trying to, make billions today. I want to make sure that the billions are sustainable, which means Bitcoin and all crypto assets need to go back down and fill previous orders in case the whales move. We want to make sure that all the whales, all the original investors, it's kind of like the game of crypto and the game of early adoption. You need to honor early investors. We call them whales. Now, whether you know this or not, I'll tell you there's 62% of crypto wallets that haven't done anything for the last 10 years. They've just been holding. And these whales are great because they give us a nice push of price up, especially if they hold and they don't sell. But they can be very dangerous because when whales decide to take profits, they create a liquidity crisis. So things just drop like crazy. And what you want Bitcoin to do, whether it will do it or not is a different thing. But what you want Bitcoin to do is you want Bitcoin, believe you me, to come back down and collect some money on the 30 and 20 at least before going to 100. That's my humble opinion. At least those two, right? Granted, there is of course the 12,000 US dollar mark that most people don't even want me to talk about. Because if the whales decide they want to recollect all the way down there and really buy low, and we're about to get a new version of whales in the crypto space called institutions. There are institutions buying 125 million US dollars worth of Bitcoin every single day and have dedicated to spending that much of money buying that much of Bitcoin every single day for the next 3 months. That's a lot of money, right? So at some point in time, we're going to have problems. But I digress. Wealthy in 3 years, people. Now that you've got my financial notes, you know where I'm buying the crypto space, you know exactly what I'm investing in and why I'm investing, where I'm investing as per those financial notes. There's one thing you need to be aware of, right? Or because I chose such a nice small segment, right? With a market cap of about 35 billion bucks, with a lot of room to 200x. Be very careful, or rather, please note the following, right? Everything comes with its upsides and its downsides. The downsides, despite how attractive, all those assets were, despite how ridiculously cheap and pricing they are, and the distance they still need to travel towards their all-time highs, right? I mean, all those things are good things. What you need to be very, very aware of is the flight of all those assets is highly dependent on a renewed bull cycle on mainstream coins like Bitcoin. And to be very specific, we will make the most money from those assets when those assets see Bitcoin do something like this. It is literally dependent on a very strong bull cycle, right? In fact, the reason why those assets are so good and so cheap, and now is the time to start dollar cost averaging them, is because Bitcoin has had a 55% drop, as I've explained, right? So it's slowly but surely starting to recover, right? There are many bullish signs in Bitcoin right now. For example, all these supplies have been taken up, which is good, right? But for me to really get excited, right? I'm really hoping for a bull cycle. And some of you who joined the Wealthy in 3 Years program sent me, emails and messages, and I'm going to address those as I can. But one of them was, how much should I put in? How much should I put in to get a good return? And I think that's a good question, most of the time, but also a very dangerous question because I don't know your pocket, number one. Number two, you really should think more about how consistent can I be. Sometimes in crypto, especially the things that I find, I did a video once of how much $1 in Shiba Inu did for me, right? $1,000 could have given me, almost $5 million in a year had I fully invested in Shiba, during that crazy pump. Shiba is a meme coin. I'm just making an example, right? So it's not always about how much you can put in and dump at once. It's dump at once in very good classic coins, right? The October list that I gave you, and hold. And then the altcoins, the gaming coins, token coins, metaverse coins, Web 3.0, all that stuff that we're going to get into right now, you want to make sure you're just consistently building, right? Because they're so cheap, right? You want to be very consistently building. And a lot of that money, I always tell people, to become a very good investor, I think you have to become also at some point a good trader. If you become a good trader, not only are you able to read the charts and understand what's going on, but you can also start having a second source of income to put into your investments. Like, so I figured this thing out a long time ago. I no longer have to go find money to invest. I just simply do the 10% rule. Sometimes it's 20%, 30% of my trading profits into my investment stuff. But yeah, I wanted to highlight this thing. We need a bull cycle to start. And in my humble opinion, this is the last supply, or technically speaking, these two, right, that are in the way, I only have a debit card, and I've got in touch with your team. Hope they guide me through. My bank is not detecting the branch code. All right, Sarid, I'll private message you after maybe. If I forget, just remind me. Someone once had a problem like that, and we sorted them out. Right. So please bear this in mind. Right, bear this in mind. So Bitcoin done, crypto done. The other thing that was big on the group, during the week, and I think big in social media, right, big amongst traders, was this article that was floating around about Russia and how Russia is now backing its currency behind gold, and therefore traders, watch out. Traders, watch out. There's going to be crazy volatility. Gold is going to go up. Ladies and gentlemen, that's okay if it's happening in Facebook and public spaces. And I don't mind being tagged when you guys see these things. Please tag me so I can address them for you quickly. But never for a second forget that the moment you start to think like a retail trader, that is the moment you are consenting to losing a lot of money. Now let's talk about Russia for 2 seconds. I mean, I'm so out of touch with the war. I see there's something about war, Russia rebuilding troops. I saw stuff about more people dying in Ukraine. I'm just out of touch with that particular world right now. But let's talk charts, because we can study the flow of money. When did the war start? 24 February, right? So somewhere in here, this is the Russian ruble. This is the Russian ruble. I want you to understand why supply and demand. Last week's theme in the war room was I saw a lot of people talking about how smart money concepts don't really work anymore. Banks know these things, and now that's where they kind of like raid our liquidity. And I was like, that's silly. That's absolutely silly, right? Maybe you're not good at placing your areas of value correctly. That's a different thing. But if you've never done a proper course on smart money concepts, you're going to struggle. It's not just about different color order blocks. So it's not, there are so many rules built in. But I want you to understand how banks thought. You must remember there were sanctions, Biden, Germany, NATO, United Nations. Everyone was arguing about Russia's role in the war. Everyone was trying to punish Russia, remove them from the SWIFT, devalue their currency, destroy the Central Reserve Bank. The stock market was losing a whole lot of money in Russia. We were flooded with all these headlines. But now let's look back and see what the banks were doing. So this is where the war starts within the Russian ruble. I'm using the the daily time frame. This is on the 24th of February, right? If I scroll back, maybe go weekly time frame. Actually, let's go all the way down to governor. Let's really talk the talk. The way we do it. In our particular course, anyways. Look at this. 365 traders. You automatically know what I'm looking for. What kind of an asset is this? Buy profile, sell profile. Buy profile, sell profile. This has clearly always been a sell profile asset, right? There's absolutely nothing uniquely amazing about it, right? This is basically the year of 2014, massive ruble crash. There was 2018 crash. God knows what crash this was. It's just a sale profile asset, right? So that's point number one. Number two, let's go to the daily time frame now so that we can better see the impact of these so-called sanctions, the impact of the wars, but what smart money did. Because you will not forget, and if you have forgotten, I can find it for you. If you've forgotten, I can help you. Russia increases its interest rate by something like 20% interest rate. And interest rate by 20%. Interest rate talk shouldn't be new to you if you've been following the channel. If you're subscribed to the channel, I've explained the impact of this thing, right? So at some point in time, this happened. The Central Bank of Russia raises benchmark policy rate by 20%, the highest in almost 20 years. from 0.95% on Monday all the way to 20, right? And that's not normal, right? You can see, in America, power struggles to go beyond 0.25. Russia went to 20%. Now, because of the war, real quick, I don't want us to spend time on this, but I want to address this Russia and gold thing and how to read the charts and how to see how smart money concepts can help you understand everything. Because of the war, because Russia was plummeting, because everything was bad, everything was terrible, you can see this crashes going through. This is what your portfolio will look like once in a while when you are investing, when Bitcoin is crashing and you're holding crypto coins. What you don't do is sell and panic. It's not financial advice. You do what you want. I'm simply trying to help you understand how banks operate. Banks were buying the living daylights out of the Russian ruble, despite how those articles were worded, despite the bank crisis. If you study 2008 crisis, all those crazy debted bonds, banks bought them. All those devalued banks bought them. They bought all these assets as this thing was going down. Because naturally, remember guys, you use a lot size when you trade, right? You guys understand what this is, right? A lot size is a transparent measurement of units you're buying in a currency. So when I go one standard lot size, I'm actually saying, here's the amount in my account that I'm willing to risk. Give me 100,000 units of this currency. Banks don't buy things at 100,000 units. Banks buy things in millions and billions of units. So if they keep buying here as the Russian ruble is crashing and crashing and crashing, who makes this decision? Who makes this decision to go 20% on interest rate hike? Who gets to do that, right? It's obviously the central bank in Russia, right? So all of a sudden, the same currency that's being beaten down during the same war, and the war is not even over. During the same war that's beaten down is the same currency that gets a boost, right? As soon as they announce that we're going to actually go 20% interest rate hike. And all of a sudden, check this beautiful thing out, right? So all these banks that use the war, their own war, really bought in more. How much do you think they're making now? Imagine someone borrowing you $100 or you going to borrow $100. And in a normal bank, you pay back, maybe 7% interest on that $100 per year. And then imagine a different person who you have to go borrow $100 from, but that person wants $100 plus 20% on top of that $100 after a year. Who are you going to go to borrow money from? You're obviously going to go to the person with less interest on top of that, right? Now imagine $100 billion being borrowed, and you have to pay back the $100 billion plus 20%. That's what the banks did. They kept buying this asset as it kept getting cheaper and cheaper and cheaper in millions and trillions, and then pushed the central bank to increase the interest rate by 20%. And lo and behold, Russia has made a ton of money. Not just Russia, but any banker, who actually had that foresight, long-term foresight to see this happening, has made tons of money in a currency that was being punished for a war that is still taking place. The war is not over. The Russian ruble has gone back to the same highs. It's actually gone back higher. It's actually stronger than it was when the war started. If you really look at this chart properly, the Russian ruble, listen to me, is actually stronger than it was before the war started. It's almost grammatically correct to say the war and the sanctions, the punishment of the war has done Russia good in terms of strengthening its currency. It's trading higher than it was before the war. That's smart money concepts. So the next thing we want to kill is this idea that traders need to go run into gold. That's dangerous, guys. You don't trade because of headlines. That's not even fundamental trading, right? If you think that's what fundamental traders do, you are nowhere close to the truth. There's nothing to me in this chart, right, that resembles, anything close to being a safe time to go rushing into gold. Now, I'm going to remove some of these zones that I was looking at earlier on. You guys will remember this point here was, we marked this zone up a long time ago, and I said, look, man, this place can hold for intraday traders, but it's not a good place for someone like me who wants to swing trade long term, right? And you can see this place has taken 2 hits. So you'll never catch me buying here ever again, all right? But that's just my rules to my areas of value. Specific areas of value can only handle specific visitations on price because we're not trading candlestick patterns. We are trading the flow of money and how much money is left in different zones. Now, if you look at this chart correctly on on the daily time frame or on gold, but also maybe with gold, just to help people, I've prepared this little thing for yourself. I've updated a couple of assets on the master trader spreadsheet that all students should have access to on our Google Drive space, right? And this is interesting. If you look at gold carefully, very carefully, it's literally up until the last COT report on the 5th of April, which was this past Tuesday. All I'm seeing in gold, right? If I look at the longs and the shorts, all I'm seeing is profit taking, right? If you look as far back as the 15th of February, so just before the war, right? We kept saying gold is kind of like bullish. Gold is sitting on top of a monthly demand. Gold this, gold that. Before the war, we were very clear about where gold stood, right? This was literally gold. If I can do this for you. Right, you remember there was that old demand, and markets, especially on the weekly time frame, were just trading sideways. Can we make this bigger so you can see it, or I can just remove my face. Right, there we go. Give you guys more screen real estate. Right, so markets were trading sideways on gold. Right, for the longest time. I mean, gold made contact with this demand last year March, went up, came back down last year August, and then traded sideways for months on end until the war happened this February. And then boom, we finally had a perfect new demand, right? So 365 traders, you can see why I want to buy down here. You remember, I'm actually very long on gold, very, very unbelievably long. I've got positions, much more lower than most of you would even believe that someone can hold there, right? And now this was the COVID all-time high in August 2020. Gold is what gold has done is it tried its level best, right, to beat that all-time high. Right, until this all-time high is removed, and you can see it hasn't removed it. Now, until this all-time high is removed, right, gold is still technically bullish, but right now is inside some serious supply territory. Now, from a technical perspective, one of the things we can hope to see happen in the month of April is that we can have a candlestick efficiency fill, which would mean gold is going to go back a little bit higher, right, to fill this week. And if that's the case, then where markets are right now, that's the trade you want to take in here. I'm not going to take that trade, just so we're clear. Like I tell you guys the trades that I can see. I tell you guys the riskier trades that might still pay off. I also tell you guys which specific trades I am willing to risk money in, right? So I do see that wick being filled, which would need this thing to go up like that. And that's perfectly fine. But for you to say, because Putin has now announced that Russia is going to be back on the gold is about to go up, you are absolutely playing yourself. If you look very carefully in the long-term structure of gold loves to do that to people, right? It loves to play with it. This is like an annoying consolidation. There's literally a range in market right now. Now, range in markets do two things. Number one, they entice retail traders. Range in markets are one of the best markets to pull a crowd of money. When markets are consolidating, you need to think about it in a different way. You need to tell yourself that it's called a consolidation, but the reality is markets are trying to lobby. Markets are trying to get some money in. Markets are trying to attract retail traders. Why? Because retail traders are trained to see opportunity everywhere. They're trained to see some sells here where there's a resistance and some buys here where they believe there's a support. And as long as markets trade in this range, what they do is they create a pattern. That pattern creates memory. Retail traders bring their chat patterns, their indicators that are programmed to look for these patterns, which is called memory, and they start to buy and sell accordingly. It works one or two times, and the moment where markets believe, and it's not just a belief, when smart traders know, how do they know? They track flow orders. They know where your stop losses are. They know where the liquidity is. As soon as that becomes painfully clear to smart money, then there's a break of a consolidation pattern, and everybody loses their money and says Forex or trading is fake. It's a scam. Trading in such a range, in my humble opinion, is risky, right? Number one. But if you look at what smart money is doing, back to the COT report, I don't see a crazy difference. I don't see a jump, because of the Russian ruble thing. In fact, all I see is, oh, let me just make this bigger for you. I apologize. There we go. All I see, honestly speaking, all I see is some profit taking. If you look at the difference, between 15 February, 22 February, and all the way there when the war actually starts sometime this week, right? So the war started on the 24th of February. So the next COT report was going to be the 1st of March to reflect safe haven asset flows and all that kind of stuff. Then we slowly but surely from there on will start to see, that momentum build up to the buy side as money runs back into safe haven flows. But while gold is doing all of that, I don't see a scary difference, right here between there, and them reducing their sell orders. The fact that they're keeping this very balanced, for the most part, for me, tells me that there was just a little bit of profit taking. Markets arrived at a supply, naturally saw the all-time high supply, and there was a whole lot of profit taking and a little bit of selling. What you want to be aware of is the sentiment indicator. We still have a lot of sell order flows on the table. We still have a lot of unfilled orders on the table. So gold can go up, but it's going up to a specific place. All right, it's going. Remember, just think back to how AUD dealt with us. AUD was sell, 80%, sell, and kept pushing up, right? Smart money conviction kept finding the perfect place to sell. So I don't know. I don't buy the whole hype that gold is about to be extremely volatile. I'm not even sure if the whole world is going to allow Russia to do all of that. But if it does, it really doesn't matter. Gold is not the first thing to back a currency up, right? I mean, you technically trade this every day. When you type BTCUSD, that's Bitcoin, right? Bitcoin US dollar. You haven't seen crazy volatility, because of that, right? It's just normal. Trade this asset normally. There is no crazy volatility to chase. You're going to lose money. Right now, for looking at gold chart, since we're already here, like I said, I'm not going to be trading anything, based on where price is right now. I wouldn't be surprised if markets do eventually break out of this range. So I would suggest be very careful with any selling on this level. The only cowboy buy that I saw that I spoke to you guys about has already happened. And once again, I told you guys it's not going to be a swing trade for me. It was a quick short swing trade. And if this gold runs, right, be very careful when markets get here. If you decide to find your buys here, your risk to reward is skewed, it's off where you're going to put your stop loss from this particular point. You're just taking a lot of risks, right? It's up to you, but be very careful when markets get into the sell zone. And there's a sell zone there that that price needs to deal with, right? And this supply on all-time high is not yet broken. Yes, price really dug deep, right, with fears of Russia and the war in March, but for the most part, that supply is still intact, right? So be very mindful, number one. Number two, lastly, don't forget your governor. Your governor is still patiently waiting for a touch. That's why I'm very, very, very hesitant to go all in on gold. We might have a feel of this week here, but we've got a beautiful demand down here, right, all the way down to the 1800s that requires some type of reckoning, right? So there are a lot of buyers, institutional buyers waiting down there. As much as they can keep gold as bullish as they want, at some point, if they start to offload, profit taking, they're not going to send you an email. So you better be on the right side of the trade, right? So those are kind of like the things I wanted to address, before rushing into just giving us signals, because I picked it up that you guys were, not you guys per se, but retail traders in general, we're very much on this crazy high horse about jumping into gold, almost blindly. Right, in terms of markets, the health of markets, right? We're going to look at oil real quick. And my take is oil, like gold, is going to slow down a bit. I don't think these things are going to rush to new all-time highs anytime soon, right? So even with oil, after being kicked out in profits, the last time I spoke to you guys about oil in the public Telegram group, there hasn't been much action for me in oil, and I'm not necessarily thinking that oil is about to explode a little bit higher right now, right? A lot of these institutions need to take some profits, need to decide if they want to sell, and then we're going to go. The only thing that I'm active in oil, full disclosure, is I still have some call options some call option trades, in oil for high flagging targets. But my deadline dates, expiry contract dates are very far into the future, so I'm not worried about that right now. All right, so oil is, slightly below $100 US. Brent oil still above 100. Not much has changed in the world there. The Asian session pretty much closed all green. You're right. I remember a question about why AX was going up, and I think it was FTSE 100. I can have a look. I don't have an answer at the top of my head right now because I haven't looked at those markets in a while. I was trying to sell the FTSE, and I don't remember seeing good news or bad news, which means I'm still trying to sell it, but my stop loss hasn't been hit. But I'm not really in profits, or substantial profits. But I don't even think I'm in any profits. But I'll check for you. Right. So that's kind of like, okay, like there's pretty much good market health across the board, except for American stocks. Now, I don't know if you guys picked this up, but during the week, one of the FOMC chairs, right, basically came to tank the markets. And my son, age 7, turning 8, he's moving him out of currencies. Still got a lot to learn, but he's doing quite well. And I'm introducing indices. So if you guys notice in the last war rooms, all my analysis lines were deleted. He removed them. And that's a game I like to play with him. And I think it's a game you should play with yourself. So I'll just teach you the hack because it's a kid. And there's nothing wrong with using this methodology. It's a good way for you to understand it. What I normally do on charts once a week for him is I'll come to the daily time frame, right? NASDAQ, Forex, doesn't really matter. So I'll come, and it's a kid, so you have to really remember. So my partner she's a researcher in early childhood development, right? So basically, children learn better through play. So if you make something a game and you put a life lesson in it, they remember it forever. All right. So as a kid, I had to think about that. So basically, we created hide and go seek on the charts. And what that simply means for him is I look at an asset, I go to the daily time frame, and I draw all the supplies and demands. And I'll tell him, yo, my guy, from beginning of time until yesterday on NASDAQ 100, there are 300 demands and 200 supplies. I need you to go find them. Right? And if you find them, I'm going to buy you ABC. So now, there's a reward for him. He's a 7-year-old. He's going to go find, it's going to keep him busy on his laptop, for God knows how. But I also want him to learn. He's doing chart analysis. He doesn't even know, the power behind it. He's back testing the strategy. He's identifying valid supplies and demands. And the ones that he finds that are not supplies and demands, I think I can then go back and reinforce the rules. See, that's why this one isn't valid. This is why it didn't work, because you forgot this area of value rule type of thing. And so I would encourage you to do that for yourselves. You need to have a notebook somewhere where you're back testing the strategy. How did you teach him to trade? Yeah. So it's been such a process, Trevor, and I'm not yet fully there yet. He's still grappling, but for the most part, it's a game. Right now, we are a game. So we spent a year last year on just pound only, and about 5 charts. Pound only 5 charts, and the idea was I have to go with him in town. We talk about what we want to buy. He wants this. I bought him this weird electric motorbike. We work out the price of it, and then I take him back. This is what Daddy does. We have to get money from the charts, and you kind of like build these things. But if you follow my course, Trevor, and I know you have access to it, I kept him in module 1. He's still in module 1. He's going to stay in module 1 even this whole year, right? It's just repeating the 5 types of supply and demand. Like how I took those 4 weeks. I want him to identify a major turning point. This is important for you. I'm not just telling a story. All traders, you have to be able to do this for yourselves. But, take it a step further and start to back test the stuff, right? So my NASDAQ analysis is back now on my charts now that he's done with this, pair. Long story short, right? So now, guys, NASDAQ, or rather US stock markets, during the week, I don't know if you guys noticed, but one of the FOMC people came out, and she's actually a dovish FOMC member. By dovish, I mean slow paced, let's actually allow interest rates very low. There's no need to be aggressive. Is he live? What do you mean? What do you mean, Mr. Kakoma? Yeah, I am live, buddy. I am live. It's not a recording. I'm here. I'm right here, man. Shake my hand, Mr. Kakoma. Kakoma is wondering if I'm watching series on the other room. I'm here, buddy. I'm here today. I'm here. Right. So if you look carefully, as soon as this FOMC member came out during the week, basically she was more hawkish. She was more worried about the economy. She was more, inflation is actually a real threat. Maybe Powell, should be a little bit more aggressive. She said something along those lines. And I keep telling you guys the stuff, right? Interest rate increase is good for a currency, but if it's done too aggressively, it affects the stock market of that country because it signals to these companies, oh my God, things are bad. Or more importantly, the FOMC actually can't handle, the pressure, and so stocks start to tank, right? But technically speaking, again, I'm not here to blow my own horn. Since NFP, I did say, NASDAQ is going to have an interesting sell based on the numbers that we get. And that sell has actually continued since NFP, technically speaking. Right now, on the daily time frame, I just want to bring to your attention a couple of things. Since all my trend lines, and my buy lines are now back on the charts, with a beautiful channel that was formed all the way back in 2020, right? And then I want to keep track of this channel. In my original charts before my little boy removed everything, there was also an amazing, absolutely amazing channel from the COVID-4, which actually does an interesting thing. You can actually see, from a technical perspective, markets being caught, if you're to draw these two channels, right? But for the most part, the most recent channel, does a better job of kind of like curtailing and painting a clear picture of the NASDAQ trade sell that we caught last year, November, which actually introduced, this long-term market crash, right? So we've got an interesting pattern and a quagmire going on here on this chart. We have, our market recovery bottom on the 14th of March all the way down here. And this is really the load up zone, if I'm being honest. Anywhere between 1300 and above to 13300 is a very good load up zone, right? Is your son, is my son trading live? Not yet. He's not yet live. So trading and gaming have terrible impacts on human beings. So if you think about it, Mr. Kakoma, the reason why every single trader in the world, struggles with trading is fundamentally trading psychology. And most people struggle with trading psychology because of their poor relationship with themselves as individuals and money, including me. The beautiful difference of a child, right? A child who's raised through what was called conscious parenting. There's a book on conscious parenting. Or rather, a child who doesn't know. My son is 7. He doesn't know how hard parents work for money. He doesn't care about that stuff. He's a child. He wants this, he wants that, he wants this, he wants that. He just says it, right? He says it, and if parents can do it, they do it. And so all his life has been taught that. As a child, you cry for milk, you get milk. As a baby, we want a toy, you cry for a toy, you get it, right? It's just how human beings socialize themselves. Now, adults who trade, you and I and everyone else, when we trade, our trading psychology is linked now to how hard we've worked for that money, and we're putting it into a risky market where the game is to take all that money away from us, introducing the fear, the FOMO, the greed, the pain, the panic, which clouds our decision making. That's one part of it. But trading also has the same triggers that video games have. So too much video games for a little child is not good because, or much, an extreme example, pornography, right? So I once read this crazy study of the impact of highly stimulus things like terrible porn, excessive video gaming, and actually trading, right? They all trigger the same addictive hormones inside our brain chemistry. So what I decided to do was, he can't go live yet until I know for a fact that he is fully grounded in this thing being a game. I never want him to have the attachment of losing a trade being equal to losing money, therefore failing at a trade. Because if I can get him to think the whole thing is just a safe video game, like a stimulation game. So we have to look at those things. So we now play Monopoly as a family every Sunday. So he understands that money moves assets and assets, but you can lose stuff. You have to pay taxes. He gets the broader stuff. Next year is when he'll go live. End of this year, in the last financial quarter of the year, he's going to have his own demo account. And in the demo account, they're going to be targets. So if you get to, $2,000, in 2 months, you get ABC, right? I'm trying to make sure that his psychology remains tamed, that he doesn't have the pressure to kind of like perform and do well all the time type of thing. So sorry for the long explanation, but no, he's not trading live yet. End of the year. Right. So now look at this NASDAQ chart. And I don't mind the questions, right? It's a family meeting. I'm happy to talk about whatever helps here. Now, this white line, you see this white line here from 2020, right? The white line I was telling you, I'm going to make it a little bit thick for you, right? I found it interesting that this white line is where markets kind of like closed under last week, right? And you'll see this red zone, I marked it out for you guys maybe 5 or 4 war rooms ago, specifically also in when I used to do those morning London sessions. I spoke to you guys about how, just be worried about these cowboy zones, right? Because these demands were not that all convincing. They were not convincing at all, right? So markets left these areas and now markets are back, right? So knowing me, I have no bias in this zone, number one. Number two, anyways, I was trying to sell NASDAQ, long term, and thank God for NFP, right? You can see there, the first Friday of the month, right? Since NFP, markets have just been gliding down. This trend line here, which I'll delete, you see this one here that I'm going to make it, I don't know, blue, right? That blue trend line right there, I'm going to remove it now so we don't get confused. This was the analysis I submitted to the public, just a few hours before NFP. And I said, look, man, markets are going to break down the structure. When they do, a big sell is coming because of NFP. Like the post is still there somewhere on social media. Markets broke down, right? And then this sell was obvious, right? Anything that's obvious in the world of supply and demand, don't do it, right? There's always going to be a higher sell. So we waited all the way up there. And on the same day, I posted this thing, literally came in NFP, markets have been falling ever since. So I no longer need the structure. I'm going to remove it. And now we're dealing with the NASDAQ there. The other problem with this, sell trade is it's currently contradicting our buys, right? So those of you who bought the market recovery buys, you need to be making some decisions. And the decision I would make is take profits. Normally I would tell you, yeah, hold. But those of you who bought 12, and I've got WhatsApps, amazing WhatsApps from people just joined the academy last year or this year saying, I heard you in a war room saying, watch out for buys around 1,200, 1,300. So I took the buy. Right now, you've lost about, almost 25% of those profits. It's time to be guarded. Now, what I would suggest is you pull out a Fibonacci just like this, and you figure out where's your maximum pain. Is your maximum pain just below, that golden ratio area? I mean, there's just so many lines on this chart, but somewhere here is that golden ratio area. And if it is, you want to move your stop loss below those zones, right? Below the 0.768, because the golden ratio area is 61.8 or whatever to 70 something, whatever. So you want to put your stop loss, your lock profit below that zone, right? And if you see this white line here, that's kind of like where a lot of us have locked profits. Those of you who were early buyers into this whole thing, right? But for the most part, this is not promising. You've got a bearish engulfing pattern. That's how markets ended on Friday, all right? Your markets are sitting on a very weak buyer's area, all right? So anything goes. You will see a lot of retail traders on Monday, Tuesday, trying to buy at 3:30 or 4 o'clock, or whatever time, they're targeting now. And if they do that, just be warned that they're most likely buying a retest, right? So then if that happens, you want to at least cash in. Just cash in for right now if you're not in the buy. And if you're not in the recovery buy, then you really want to consider if this risk is worth taking for a sell. And my answer is the most obvious trade is never really that much worth taking, although I do believe there's a lot of probability here. Now, this is what the world thinks about what this lady said, during the week, the FOMC stuff, right? So I checked the Fed monitoring tool, and you'll see the next FOMC meeting is on the 3rd. It's in 3 weeks, 3 weeks from now, on the 4th of May. And I'm going to stream it live like we always do. I'll be breaking stuff down as Powell speaks. If you guys like that, you guys say you enjoy that kind of stuff, so that everybody's on the same page, I'm happy to do it then. But look at the poll, man. Everybody, like this is crazy. Now, 80% of market participants who participated believe that Powell on the 4th of May is going to give us a 0.75, interest rate hike. It's unbelievable. I don't think that's possible. Not our Powell. Powell has been so chilled. Powell said, I'm not going to be spooked. I'm going to wait for the market to kind of like, tipply top in June, July, right? We're looking for that peak of inflation, right? He could do it, but that would be a big rug pull. If it's a big rug pull, remember, markets price in everything. So you're looking at this as a market participant and you're like, geez, Powell said we're doing 0.25 and then maybe in August we'll go 0.50 basis point. But the market participants believe we should go 0.75 to straight a 1 full point this coming May. Now, there's what Powell said, there's what the markets participants think you should do, and then there's what Powell is actually going to do. Now, if Powell does this, because I know they check this, and you'll see how this will change a week before. Somebody take a screenshot. You'll see the difference. You'll see how a week before this changes, right? Because we're going to get CPI soon, right? You guys know straight after NFP already CPI has dropped. Maybe I was like under a rock and I missed CPI. I've really been, grinding for you guys, building some stuff. There we go, CPI. Yeah, Tuesday. There we go. So we're going to get CPI in 48 hours, right? In 48 hours. If we look at the past CPIs, there was this weird rig. Gotta love market. So a few days before FOMC announced the interest rate hike, right? We all know this was trash. This was bull. This was absolutely trash. But it was the only way it was going to announce a 0.25 interest rate hike and not give what the markets want, as long as CPI maintains some type of steady, meets the forecast. But if you look historically, since November, since tapering, CPI has always been higher than forecast, right? So now, all of a sudden, because, and look at this, guys, please don't let them play games with you. 0.9, 0.8, 0.5, 0.6. The expectation here has gone up by 0.3 points. Here it's gone up by 0.1. Here it's gone up by 0.1. Here it's gone up by 0.2. The most CPI has ever gone up is since November last year. The most CPI has ever gone up since November last year is 0.3 points, right? Or percentage points, right? And this was pretty much in November when there was a big tapering debate. All of a sudden, CPI is going to jump, from 0.8, 0.9, full 1, 1.1, almost 4 to 5 percentage points to get to 1.2. All of a sudden, that's the forecast for this coming month on Tuesday. And that's because they have to put back the truth of what happened last month here, right? Basic market manipulation, it's kind of like covered in module 3, but it's not important. What you need to know is how to trade, what's in front of you. But the war rooms give you an insight for you to see how deeply unfair trading is. A lot of people don't talk about that. Trading is one of the most unfair things to do. It will give you a lot of financial freedom if you can master it. But mastering it, you need to remember this market is not for you. It's smart money's market. You just get to take a ride. So if this happens, or if the markets get a sentiment around this, and every single trader who knows what they're doing in terms of institutions, we'll be looking at this is going to be the most important thing to happen in markets since NFP this Tuesday, the CPI data. If CPI comes in hotter, right, because it has to catch up, right, then of course, this fear is going to be fed in more, right? You're going to come back now. It's going to be like 99% of traders want this. And stocks might be like, oh, damn, we actually are currently being led by an incompetent FOMC, right? And then all of a sudden, this is open. So once again, early buyers, you hold because you have faith, but I'm worried. I'm actually worried about the patterns I'm seeing. You never get a clean bearish engulfing pattern under a well-drawn trend line. All the sell signals are kind of like confirmed, right? And right now, I'm not seeing it, right? And you know me, I've been extremely bearish on NASDAQ long-term. And I did tell you guys that as long as markets keep defending 15,200 mark, right? And then I'll buy trade, buy good buy trades like this one was a very good one. When price comes down here, I'm also going to buy again. I think that's a very good buy trade, but I'm not buying to blindly swing long term. I just don't see it. It's going to take a lot. I'm not even ready to say, if I'm being honest, that NASDAQ is going to return to its all-time highs this year. And you're like, okay, that's NASDAQ. No, then what does this mean about crypto? Right? I'm not ready. I don't see a strong bull market in front of us. And for those of you who are not listening, this is the best time to invest. You want to get these assets hammered and cheap right now. As you know, and you want to really accumulate as much as you can. I mean, I wish I could share, some of the things in the Wealthy in 3 Years financial notes. I really wish I could make it public, but it wouldn't be fair for everyone. Guys, there are so many beautiful tokens, but even these things, I mean, where will you ever get these mega caps? I mean, look at Netflix. Let's look at Netflix. I mean, I watched a Netflix movie yesterday, and I was like, damn, this is interesting. And then if you really looked at if you look deeper into the Oscars, outside of Will Smith, slapping Chris Rock, you'd have noticed that, Hollywood as a genre is failing, right? Like everything's on stream service, Netflix and Disney. Like look at this. This is a public stock. This is a crazy, it's like crazy, man. Netflix is much more cheaper now than it will most likely ever be. And it's not cheaper because it's our sell profile asset. It's cheaper because it's coming from an all-time high. There was nothing more it could do, right? Remember, if you want Bitcoin to go to the moon and you want Netflix to go to the moon or any stock, NASDAQ, blah, 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 you need hot wallets. You need more people putting money. But those people always have to be dumber than you. You are not going to buy a stock up here. You should have been buying Netflix with me since 2020 when I told you guys to my social media pages. But right now, it's come back. It's come back to a perfect demand. Look at when they announced where Elon Musk bought a big stake, the biggest stake in Twitter. I mean, I'm going off the rails here, which is not a good idea because we don't even have that much time together. But if you see, if you combine the news of Elon Musk buying Twitter and you actually look at your charts very carefully, you will notice that price had left a strong daily demand. Like it's incredible, right? 365 traders in the private Telegram group, I posted this analysis where me and senior traders bought and where we want to buy again. If you're a student, I want to give I need to start developing that mindset. Students must get some things different privately than the public, right? But look at this. The things I've told you guys about gaps. Twitter is coming. It's coming again, right? This is a perfectly clean stock to trade. You go at Kinihashi, you can see. Open your eyes. It's right there, right? So anyone who bought the news, you never buy the news. You bought the news that Elon Musk, blah 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 blah. Boom. Where's your money? It's gone. It's gone. It's gone. Right? And that's the game of markets, right? Zoom trade, flip-flop, right? But this is going to be a very good trade. Please go back if you're in the private Telegram group, look at my analysis and buy with me again when it's now time to buy, because markets are about to really rally, right? We've got a lot of good room. We've got a lot, the entire stock market really is on sale, right? We've got a lot of good room here, ladies and gentlemen, a lot of room until we get up there, right? So, a whole lot of, jibbly jabs, I apologize. So now, in our last hour of the war room, normally there are 2 hours, I want to do very little teaching and I want to just go through as many charts as possible, if that's okay with you, and just cover all these golden assets that I think we should be looking into. So number one, according to our list for the day, Euro Pound. I always bring up Euro Pound because, I am in deep earnest and prayer for multiple entries long term. I finally got a clean one that I shared with you guys the last time we spoke. And the reason why I want Euro Pound is because I know Euro Pound is going to be like my Euro USD of last year. It's going to be a big money maker. I'm a big seller. I don't care how many highs I need to find. If markets keeps kicking me out, that's perfect. But finally, we're at a beautiful sell area right here, all right? And the reason why I'm bringing it back up is if markets were to ever come back here, right? If markets were to ever come back here, I'll try and sell again. But I want you to know that it will be to be a cowboy sell. So I'll be willing to lose money because I know there's a deeper touch up here on the white line. So this is for anyone who's missed out on euro pound, right? There's something going on there. So let's just quickly do this so that it's clear as day, right? But I'm definitely keeping my interest from up here, and I'm open to risking some money here, even though this sell is much more terrible, or not terrible, risky. This is a much more risky sell. There's actually like a textbook sweeping area, right, where the impatient get dealt with. Although I've seen markets sometimes respect cowboy zones, but in any case, I really want to build my position in euro pound, right? A lot of people don't understand that swing trading, you have to build. You want to become filthy, dirty, wealthy with swing trading. You have to build. You have to build. It's not enough to get a clean, perfect entry. Once you get it, you keep it, you hold it, you use the equity that it gives you to keep building. You got to keep building. You can't just take one trade and think all your problems go away, right? So I've got these two clean positions that I'm waiting for now. Why this one? Well, this is a reaction to a previous supply level that we spoke about many times. And we said price was going to come to many times on many war rooms. It did. It came back. So happy, on the last day of the first financial quarter, just about 10 days ago. But now, and markets have kind of like, done a good job not caring about the demands down here. So all we want now is structure. Remember, it's not enough to be inside a trade. Price must communicate that it's sticking to the plan. And how when markets are going down, if you're selling, the structure you want to see is this high, coming back and markets creating a lower high. This is kind of like the structure you want, right? You want this continuous structure being built on your chart. So you're not scared of retracements. You don't just panic because there's a retracement. But what you want to do is you want to make sure that the retracements honor the structure. They don't take over too much, right? They kind of, so if markets were to close here to come back down, that would be great, because for me, that's what I'm looking at. But I'm open to being wrong about this zone as long as markets stop here. Because if markets then now create a new higher high, not only do I lose my position that I've had for such a long time, but potentially it means I need to go relook at where price wants to be. And for structure, you want confluence, right? So we want the confluence stuff, in the background. Those of you who've kind of like seen how I work out my confluence, we use MTA, multiple time frame analysis. Want that confluence with higher time frames. You want all that stuff there. You really want to make sure you build a case. And when you build a case, you build. And those of you also know, the 5% rule will apply. But if you're walking around carefully on the charts and actually closing, or locking profits, making sure that your stop losses are at the right place, you should be fine. You really should be fine long term. But remember, if you look at the governing time frame, euro pound has a long way to go. Euro pound strategically has a long way to go. Right? We're done. We've opened the gates, right? Well, the problem is who's going to stop us along the way. They're going to be bumpy rides, but we've opened the gates to the downside. This is a non-negotiable. Like Euro USD fell, Euro pound is falling, pound USD is falling. Your risky assets are following a pattern. Money is moving in one specific direction, right? So I'm very happy, and excited about this this particular trade. I'm happy that on the governing time frame, we might actually get a bearish engulfing pattern, although it's too early to tell. Today is only the 10th of April. But if we're to get that, a clean bearish engulfing pattern, oh my goodness, what would happen in the next month in May would be, the filling of this wick, of the green wick here. We want to hold this whole wick to be filled with another beautiful red candle. I don't care about the engulfing candlestick being retested, the following month. I want to break out of the zone, basically, right? I've waited for this particular sell. I'm excited about it. And with trading, you always know how much you're risking, because which means you also know how much you can make, right? The upside of it. So I'm very excited about the damage that this sell can do. And those are the places that I've been looking to kind of like take trades. In case I disappear, just be very mindful of this type of thing. This is coming from someone who runs war rooms in March, not a single loss. So I can't even remember what the statistics were. I think we had no loss, or we had one loss, AUD USD, but it wasn't really a loss because I told you in the public Telegram group, close while filling profits. another war room last week, 0 losses again, right? This won't happen forever. Right? We were a terrible first financial quarter. Some of my swing trades were being taken out simply because of sentiment, right? But I was risking very little. You guys at the transparent accounts with the lot size in $5 here, $10, $100 nothing crazy. And if we won, would go 1:3, right? To cover that up. Right, so it's not that we don't lose, or I don't lose specifically me. It's just that I'm simply saying, I think you should take some of these trade calls very seriously, right? So this is coming up here, but confluence is key. Build it, watch this area. We've got a bullish engulfing pattern since Friday, matching this one, but closing a little bit lower and being saved by this turning point here. If you go at Kinhashi, you'll see why there's still room to worry, right? So there's a very clean low here that still needs to be broken, right? And when it gets broken, then we can start to celebrate, right? And then here is where we can get a run to the upside to the zones that I've marked out, right? But don't be shy. If you've got access to the course, keep refreshing these things, right? So here, I'll subscribe that ask you to go back to module 1. Module 1 is your friend. Module 1 is mastering the basics, right? So on the new platform, it'll pretty much be this. After you get all these things, different types of supply and demand, what they look like, how they look, there are 5, and you now know them. The next big lesson that you want to focus on is right here, number 14, 15, and 16. And then there's the one that Mr. Mark said I should upload, the golden nuggets, the one-on-one with me and Mr. Johnson. I'm going to give that to everyone on YouTube, right? Because I actually teach you guys this confluence idea. And no, nothing changes. Nothing changes in the markets, to be honest with you. So it's absolutely something that I would prefer that you keep mindful of, right? So that's Euro Pound. And I think I took too long on it, but in any case, you get me. Euro USD, as usual, people always ask me, Leroy, is the euro strong or weak? Strong or weak? And I keep telling you guys there are 2 supplies and demands. All demands are equal. Some are more equal than others, and that's the game we're playing, right? But for the most part, for anyone paying attention, you'll remember my heartbreak sell area up there, probably not going to happen anytime soon. And it's something to accept right now. But now to look very careful about where to buy, where to sell. We don't have a bearish engulfing pattern here. Someone who just completed module 2 sent me a screenshot asking me this question. I haven't answered you. Sent it yesterday. I'm answering you right now. We don't have a bearish engulfing pattern. This is not it. This is not it. It has to close. It's just not it. This is not going to work. All right. So be careful of that. Right. And markets right now are very much deeply in that stronghold zone. So these are like these weekly, daily buy zones inside that very first level of contact, very first demand here, or you see on the government time frame, right? Any euro buys that I'm going to take seriously in my life are going to happen down here. Euro buys that I want to take seriously in my life are going to happen. Until then, euro is weak. Euro can't just start buying right now, by the way, right? You got to remember the flow of money is like a very keen thing for markets, right? So, I'm embarrassed about how, not properly up to date this area is. It's not up to date. But if you look at the CO2 data, dating 5th of April, you can, there's your euro right there, right? So I've got that up to date. The 5th of April, you got a lot of orders, your sentiment indicators. It's not to say go sell now, right? Remember, this simply translates to the thinking of smart money. Then you, no sir, don't give it for free. The course is already extremely cheap. You see, and I completely agree with you guys. That's literally, I agree. The course is down 75. I don't know what traders want. I don't know what people want. And people actually think, well, I know there are some people who put scandalous courses together to live, and they're not profitable traders. They live off other people buying their useless courses. I get that fear, but I'm not that, unfortunately. And I think I've spent so much time proving, that we know what we're doing. I show you my live accounts, whatever. It's up to people now, but it's 75% off until the 30th of April, and then it goes back up and stays up. We're only doing this discount because our anniversary, 365 turned another year. But yeah, so back to my point, euro in the last COT is still down, but we've been very careful in expressing. So if you look euro at euro, this part is not up to date. But if you look at the dance between the euro, markets still moved down, even though they were playing a balanced consolidation, like 53% longs, 46 shorts, 52 longs, 47 shorts, right? But I kept saying to everyone, as long as my net difference is negative, right, it's a good sign to understand the flow of money. And that's what we have here. If we go to, the most recent, and I put it together here, you'll see the flow of money as of 5th of April with EURUSD, which is the asset we're looking at right now, right? Our longs are 53% and our shorts are 45%. And we've got a little, for this past week, we've got a net difference of about, 27,000 orders, kind of going up. But you have to measure them against net change and all these complicated things. But for the most part, if you want my opinion, I still see a lot of weakness in euro. But this weakness in euro now, guys, and here's the trick. It's located within the low of the curve, the supply and demand curve, right? So you don't like being a low seller. You want to be a low buyer. So be very careful, right? So what this means is when I look at a chart like this on the daily time frame on Euro USD, while very tempting, this is extremely tempting, right? And this trade could work. That's clean. That's a very, very good, amount of retracement reacting to a previous supply there that also had a very similar good imbalance. This one, though, in red was actually much better. The problem is Leroy will not touch such a supply unless such a demand is first taken out, right? I personally speaking, it's how I would prefer this to play out. I would prefer the demand gets taken out in the next 3 or 4 days. Then I can rock up there for that supply. That's just me. Because if I take this supply sell, leaving all these buyers still in control, and maybe these black lines are a bit confusing. I put black a while back during the morning sessions. But if I take a sell when these buyers have not yet been fully exhausted, right, with the battle of money, where either there's always a majority of buyers or majority of sellers, if I'm not careful, my sell will literally be on the wrong side of the trade. So let's just quickly make these lines white. I hope you guys are doing okay with time. Just a kind reminder, we started 30 minutes late today. Instead of 4:30, we started at 5 p.m. South African time. And so, normally would end at about 6:30 p.m., all right, 15 minutes from now. But because we started 30 minutes late, I would like to ask for those 30 minutes, please, into the future so that we can really clarify what's going on here. I'm going to go Akini Hashi just to tighten some of these areas, if that's okay with you guys. And if you have to go, you have to go. I completely understand. But what I want to avoid is making a promise I can't keep. Like during the week, I'll upload more. I couldn't keep that promise this past week. And I felt very, very bad about that, right? So let's just say, this previous demand has done its job. Let's reduce this entire area to here to really kind of like test, validity of Euro USD. And my humble opinion is, as long as these buyers are still hoping to get their orders filled, I would be very careful. And I'll also be careful because it's a big week for the dollar, right? With CPI dropping, it's a very big week for the dollar. And if the dollar, shows any type of weakness, as CPI drops on Tuesday, then there's a strong, euro rally, that short term, right? This money, smart money has already announced it, right? That look, be very careful. We've got this cooking. I mean, I wish I could give you guys a clearer picture if I had all this filled up until, and maybe we can quickly do it together. I don't know. It's up to you. Do you have time? I got time. Let's quickly do it together. All right, so it's quick because my main COT spreadsheet is already filled up. So maybe if you just allow me, if you can stand up, go make yourself coffee. Coffee will take time. Just juice, I'll be done here. I'll be done. So Euro USD 2022 of March is already in place. So this 2022. So this 2029 that we're now taking. Okay, perfect. Once I took the wrong column and it messed up the entire thing. It took me like forever to even realize what was going on, right? So that's March 2029. I'll just tell you right now what I just want to see the whole thing. It'd be nice if we had like a theme song while I do this. It's so awkward just in silence, right? So this is March 2029, and remember, it's just April now that we need to add in, right? So we're almost done. I just want to see, go ahead. We are blessings, guys. Thank you so much. Thank you for the extra 30 minutes there. Yeah, I just think it's better if I just sit down once and do this. And if I do have time to do more videos for you guys during the week, then I can do that, and it'll be nice then as a gift then versus as a broken prompt, right? So this is the 5th of April, which was last week Tuesday. Right, so cool. It didn't even take time, right? So we're done. So this is kind of like what I have with the euro, which is kind of like what we always have. Why have we always had the same thing? Because markets take, banks, institutions take forever to kind of like change their mind on things, right? But it's been on this downtrend. It's still weak. There is a demand, I get that, but it still needs to be removed. There's a lower buy on the table. And markets love lower buys and higher sells, right? So this is what euro, as an entity looks like, right? Still, for me, I still see a lot of weakness, and you're gonna have to kind of like judge this for yourself. If you take a buy, you're taking it because you're good. You know exactly when to get out. And if that's the case, that's fine. And that supply that we marked in the red there on the daily time frame could be a good place to get out. But like I said, if I'm selling, and I obviously want to be more selling, right? You can see nothing has changed here. 53% long, 46, 50, like nothing has changed. Like since November, like literally, or at least January in the 50s, but in November, 49.50, like nothing really has changed in euro, right? No one is trying to do anything crazy in the institutions, right? Everybody is selling this thing slowly but surely, gradually, right? So we've fixed all these demand zones and we've given them a better, white lighting. So this is where markets are sitting right now. See, I readjusted this demand on the left. You guys saw me. That's where price is sitting. So my thing to you is, right, markets are gonna, meet this equal lows, right? And maybe Monday, Tuesday, you're gonna get this, right? So if you want to buy, but buy with your eyes awake, number one. Number two, buy knowing that weird guy on YouTube called Leroy isn't buying with me. Okay, I don't want you to say I said buy. No. I sell because my smart money is selling. I never counter trade. If you guys follow my channel, I let things go, trades that we know for us to sell up there, markets have to go up, but I'm never part of that upward movement. I would rather tie my capital into something in line with smart money. And that's the thing that retail traders never think about in this business is you always have a limited capital and there's always millions of trades to take. There's always so many trades to take, but you've got little capital. So I prioritize trades in line with trends because I have a higher probability of coming out on top of those trades than risking, markets could go up here, for example, and you've seen this happen. If you've done the course, you'll know in module 1, there's something called original turns, right? So markets could stop here. Then you're screwed, right? Because you're still holding a buy, hoping to exit somewhere up there, and then markets decide, nah, there's an H4 supply that we want to take, and they take that H4. Look at this. I'm making stuff up, but it's right there. There's an H4 supply somewhere here. There's another one right there. Any of these could stop price from going up. So that's why I don't want to buy. But if you do want to buy, just be awake. Right, now in terms of selling, there's a high risk sell area, cowboy trade, and the reason because of that is the proximity to this daily demand, number one. Number two, this demand has not yet been removed. Number three, I only want to take trades that give me a risk of reward ratio to 1:3, especially in Forex, right? In crypto, 1:2 is good, although I swing for as much as I can. But in Forex, because of the high rate of liquidity rates and the pings and the complications and shifting sentiment, for me to take this trade and make money, my profit target needs to be all the way here, minimum. See that? That's 1:3, which means just like I said at the beginning of this analysis, I would prefer for sellers to first take out the demand and then come for me, and then I'll go down with them, right? Because remember, if they take out a demand, they are communicating that there's now less of a cowboy area. It's still a risky trade because it's low on the curve. Go back to module 2 when I talk to you about supply and demand tools. We don't use indicators. We've got good tools that are not lagging. Supply and demand curve is one of them, right? So go back and have a look at that kind of stuff, right? A chart like this, ladies and gentlemen, immediately will need to be traded all the time in correlation with DXY, the dollar, right? The dollar is boom, 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 right? Going back up. Sometimes, someone was laughing at me in the senior trader lounge. I think it was, I only had 2 meetings with them this week. I couldn't do my week every day type of thing. So probably on Monday or Tuesday. And that's because I finally closed my buy. So remember, I was in this long-term buy from June, July last year with the announcement of the Fed considering increasing interest rate hikes to counter all the money they've been printing, right? So markets ran Literally, this is crazy, right? They didn't increase interest rates. They spoke about why it's important, how it is, and this was a pricing in trade. You know how we say markets pricing everything. The dollar rallied because it was pricing in strength. Right, so that's why when the actual FOMC 16th of March, I mean, oh my goodness, can't believe this is my first time telling you guys this stuff. Where's the FOMC thing? On the 16th of March, when the FOMC finally increases interest rate, the dollar drops. And people are like, wait, what? Why did the dollar drop, right? Well, because the dollar is under the governing supply. How did it get to the governing supply? Because last year when FOMC said we're going to increase the interest rate, we are going to start tapering in November, we are going to stop printing money, markets priced in everything. They priced in a strong dollar. The dollar became strong based on that sentiment. And so that stuff kept kicking ass. Right? So it was a good trade. Right? So the senior traders were laughing because I closed here. I closed out of principle, right? We arrived at a governing supply. But yes, the dollar is still strong. Like I told you guys many times, our daily uptrend is still intact, right? Nothing to worry about. And the big thing that's gonna get us shaking is CPI on Tuesday. Ladies and gentlemen, just like EURUSD is sitting on top of a demand in the way of a lower demand, the dollar is sitting on top of a supply in the way of a higher supply. Let me show you what I mean. I've shown this to you many times. I'm going to show it to you again. This is our governing time frame. There is that supply there. This is the Donald Trump presidential supply, the Republican supply when Trump became president, right? This is after the Democratic Obama run. Democrats are demand creators. Obama, Biden starts his presidency when the dollar is down here. There's a bullish engulfing pattern in November last year, right? November, December of the election when Biden gets elected and bada boom, right? So that's what Democrats do. They make demands, Republicans make supplies. You Google all the presidents, Republican and Democrat, get the dates, come to the charts and prove me wrong. I'm right here, bro. Just prove me wrong, right? So just trust the process, right? So this supply needs to get taken out, in my humble opinion. And you can see the dollar isn't edging. And in here is the only time where we might get some break, like some serious dollar weakness will come through somewhere down here. And if it does, that's when I'll be taking a much more serious look at long-term swing trades, right? It's just been a fascinating, beautiful chart to trade. So I'm simply saying there's an inverse correlation between EURUSD and the DXY. And it's something to keep note of, right? Especially on Tuesday, right? Markets are going to rock on Tuesday, and you want to be kind of like, mindful of that. Question. Shout out to the Academy. I just popped in to say hi to the fam. Hey, blessings, Simpiwo. Good to see you, brother. Good to see you, man. Yeah, please do catch up with the video, man. Right, cool. Right, so we're heading up, clean upward trend line, and you can see that the end of this trend line and where price is going is potentially, right? Potentially, we're going to get a supply break, and if we get a supply break, we know it means the roof is open, right? Then you don't want to buy there. Don't fall for the trap. Doesn't matter what CPI says, right? You want a pullback. You want to buy a healthy pullback. You don't want to buy momentum. You want to buy low. So please remember that, right? So that's what we should be kind of like be watching out for. And markets have done the same thing that gold did, created a range in market, consolidated and destroyed people, right? Even supply and demand traders who kept saying it's a supply, it's gonna sell, it's a supply, it's gonna sell. Yeah, okay, 1 touch, 2 touch, 3 touch, no more. What are the rules of supplies and demands? What are the rules of areas of values? What's the glass effect, guys? Yes, man. Now we spend so much time. You have to spend so much time building the rules. It's like a manual, right? If you've got children and you have to build these complex too far. My son had a 1,000 piece Lego. Like my mind isn't smart enough. I have to read the manual of all these little pieces so we can build this weird space world that he wanted, right? And that's the same thing with trading. Rules are important. Supplies and demands get weaker and weaker with every touch. See that there? This is a consolidation period, a lobbying period. Either you're calling a lot of sellers because you're buying supply, or you're calling a lot of buyers because you're about to break a supply. And we finally have an answer, right? More buyers were called in, and so euro remains weak, etc., etc. So that's EURUSD and DXY. coming from a guy who said he doesn't want to teach anymore, I sure am doing a lot of teaching, right? Pound USD, no debate, still weak, will be weak. Don't care what your Forex guru FX says. I don't care who's trying to buy it. I'm telling you now, it's going to follow the same Euro USD pattern. It needs to. It has to complete it. Euro Pound USD is coming back all the way down to this March recovery levels, right? So maybe somewhere here, you can then start to be brave enough to try and buy. Right? I told you what's going to happen, and you can see markets are not letting go, right? It's happening week after week. And this was a clean trade, by the way. A very clean trade. If you guys watched my video last week, I told you how unfortunate it was that I missed this by a couple of pips, right? So inside this gray area, I had identified a good sell place. And then inside the yellow area, I had identified like an H4 zone. Let me go to the charts right there, right? So the yellow area was going to be a good sell place, right, on the H4 zone. And you know this red zone here, those of you who are used to attend my morning live sessions, this was actually a 1 hour supply. So this zone I marked up on my intraday chart. So I do it on Owanda. You'll see lines on my Owanda charts, on my intraday charts. And that's where markets kind of like flip-flop, like this gray area on the 1 hour time frame. I don't mind showing you all of this stuff so you just don't think I'm making it up, right? But it wasn't there on my swing charts, because on my swing charts, what I like to see is confluence. I want to see alignment on H1, rather H4 and daily even. I hardly ever consider H1 on swing, but there was that beautiful, you know, see this area there marked in gray? That's that red area there. Beautiful, beautiful structure that I thought I was going to take as an intraday trade before I got wildly busy. Right, intraday trades, I was doing them live with you guys every day in the morning. Right? But it was clean, just magnificent, perfect area of value on the pound US dollar. And then markets hit that zone on the 1 hour time frame and just decided, you know what, that's more than enough. We're gonna keep crack-a-lacking and drop it. Right, and so since then, you know, it's just been a beautiful continuous sell. You can see markets have just done a marvelous job of removing as many demands as they can and digging deep into the ones that they need to remove. And I missed it. So basically, I missed that entire swing trade because my sell signal was just a little bit higher, just a couple of pips higher than where I would have loved markets to kind of like turn with me, right? And since then, you know, that's just been the case, right? So where to now? Well, unfortunately, now we're in interesting territories, right? You know me, I cannot at all soberly, right? I don't even drink. But even if I did drink, I would never do it intoxicated. But more importantly, because I'm very sober-minded, I cannot right now at all recommend a sell. We're deep inside a potential demand. Yes, the demand is on the other side of a trend line. Yes, it's a demand inside a structure that was completely broken, right? So this was when markets were kind of like, you know, falling as earmarked by this 2008 long-term white trend line. There's no need for me to scroll all the way back, but if you really want to see it, you'll see that this trend line tracks where price started to fall since the not first, but much more recent financial crisis of about 2008, 2007, all the way there, the housing crisis that destroyed everything. Right, and then you can see that markets, you know, kind of like broke out of that bear structure, right? So when you break out of a bear structure or a bull structure, depending on the direction of money, you already take a lot of these things on the left seriously. For example, this demand got broken, that got broken, this got broken, this is probably going to get broken, is what I'm trying to tell you. And until, you know, markets arrive all the way down here, and this is no longer a fresh demand, right? You can see that markets fell into it, got a retest, and then read it like crazy. This is the demand that broke structure. This is a very important, that's why this one is marked in green, right? It's weekly demand number 3, inside governing demand number 1. If I've taught you before, you know what these symbols mean, right? Governing demand number 1 is quite big because the 2020 March demands, right? And on a weekly time frame, on a daily time frame. And so in my humble opinion, you know, just be careful. If you're trying to buy here, I would highly not recommend it. You know, you might make a little bit of pips. You know, some traders think just because they closed in profits, that was a good trade. They don't understand that you got lucky or you got out in time, right? A good trade is a trade you don't babysit. A good trade is a trade that moves in line with the flow of money, that doesn't trigger your psychology. That's what a good trade is. A quality trade is always in line, right, with the bigger picture, the powers that be, right? So I see this area being removed, right? Which would be beneficial, right? But if retail traders do pump the markets, and we can actually maybe check. Let's quickly see sentiment, client sentiment, right? Let's quickly see what they want to do, right? Client sentiment, I've said to you this, guys, many times, accumulates a lot of data from different brokers. Unfortunately, not all of them, but it gives us a very good sign. So look at this, pound USD. 73% of retail traders want to buy the pound. So what's the client sentiment, guys, is pretty much a shallow version of our trading strategy, right? Our trading strategy is 365 is we do everything that retail traders don't do. If retail traders are buying, 9 out of 10 times I just want to sell. I want to sell because 9 out of 10 times retail traders are wrong. And that's what the client sentiment is. It's like a weaker version of supply and demand, but it helps you put things into perspective. 73% of retail trader money has got buy stops, buy limits, and probably already had buy execution orders on Friday. That's what makes up the data here, right? So all the buys that retail traders want to take, most of them are leaning towards buying pound here. You can see why. They're like, oh, okay, cool. This is where they want to buy. And because of that, client sentiment says you must become contrarian. Contrarian means opposite. You must do the opposite. If 73% are long, this is a strong bearish contrarian indicator. Strong bearish contrarian indicator, which means to say smart money, or most of us, will be looking to sell against this, because finally, if you want to sell something, you need someone dumb enough to buy it. And this thing is saying, look, man, well, we've got 73% of retail traders dumb enough ready to buy this thing. So again, without even knowing this, I was right from the jump. For me, I'm ready to buy it here. In future, you don't even need that client sentiment indicator. It just helps you collect data. In future, remember the rules. If markets have an order block on the other side of a bearish structure or a bullish structure, that side, that order block isn't going to have a lot of weight, right? It could cause a reaction. It's not going to have a lot of weight. Now let's look very carefully a bit more. Let's go Sherlock Holmes into this demand, even though that means I am teaching, but who cares, right? You can already see that markets have completed one phase at least, right? Fresh touch, done, retest in the process, right? Now, what smart money will do, is probably give retail traders a green candle. Oh, they love giving them that, because then what's that? Confirmation, and all the retail traders start to buy somewhere there, and then we can swoop in now and sell completely against them, right? So once again, there'll be no buying being done by me on the yellow zone. There'll be a lot of selling. I'm going to keep some pending orders somewhere here for sell. I'm going to relook at these zones here on smaller time frames for a fresh area of value, H4, H1. I'm going to wait and see. I would very much prefer to do all the selling in the world after this area has been removed. Personally speaking, I would feel so much better to do that, right? Because I'd get a strong upward movement to the upside. We'll have a lot of unfilled orders parked here waiting for us, a better sell high opportunity, and I'll do that. But the reason why we don't want to buy into that wave is because the buying could stop here and the selling could stop there. Like, look at how we waited for that higher Euro USD sell, and look how it just didn't come. It's there. The analysis is perfect, but markets didn't bring it back, right? So you have to really kind of like consider these kind of things, right? So pound USD, I hope we are together. I hope we're clear. USDCAD. Honestly, guys, I need to shut up now and just give out signals. I love teaching. I love dealing with this kind of stuff. And I'm excited about April. I'm excited about the new course program. I'm excited about a whole lot of things. I'm excited. I'm excited, right? Europe, USDCAD, I don't know which week we did this analysis, but if you see for yourself, it's exactly as is. It played out perfectly. We wanted the sells. The sells are all the way up there. That went down. And then look carefully here. So we've got the trend line. Let's first track this trend line. Let's go to the weekly time frame and let's see if we can understand it. USDCAD, by the way, has a massive correlation. It's my favorite thing to trade. Once I have clarity, and you need to kind of like develop this for yourself. what assets you like. I'm a dollar guy. I love dollar. I follow all things American news. I love the American markets. I love the American stocks. It's just what I spend so much time learning. I also learned that, generally speaking, all bad things in the markets, crises, mishaps, market innovation really does start from America. So because of that, yeah, my entire strategy is tailored around that stuff. So a lot of my favorite things to trade are around the dollar markets. But needless to say, you as a trader need to develop your own thing, right? So if I come to USDCAD, which is somewhere here, right, USDCAD has a massive correlation with the dollar. And I'm just using this as an example because it stepped up. I'm using this as an example because it came up. Come on, there we go. Right, let's scroll down and find the one that I can click on, USDJPY. There we go, USDCAD. And I've shown you guys this many times. You go to my FX book completely for free. You look at market correlation. You click on the asset that you want. You're going to get 3 columns: top absolute correlation, top positive, and top negative. Trade ideas for days, right? Absolute correlations. And you really want, let's just go to positive so we don't waste time. All you want is anything above the 80s. You don't really want to trade, even though they're good. 76 is good, but you really want high probability setups. Be extremely strict. Less is more in trading. To make money in trading, you don't need 50 assets. You actually need 4 assets that will not lose your capital. If your trading always starts off with how much am I going to gain, you're going to lose it all. Trading starts off with how am I on the risk side, right? How am I on the risk side? And this is what's happening here. So you've got USDCAD, an 86% correlation with USD NOK, or pound Mexican peso, or USD Mexican peso, right? Any of these top 3 are the type of charts I'll go look at if I get a DXY idea and a USDCAD idea. I'll go see if I can match myself there. Right, so this is on the weekly time frame with the FOMC buy level, right, where we started buying the dollar, the place that I showed you guys, where I said markets priced in a strong dollar because the FOMC announced it was going to increase the interest rate, which was last week, June or something like that, if I remember correctly. Beautiful moment. There we go. May, just beginning of June, with this upward trend line. Right now, we are now on the other side of the trend. You can see markets have broken through and we're on the other side of the trend line. Now, I've got buy there. Let's see what happens. So I've got this weird arrow that says, look, man, I think markets are going to try and buy into this area. 2 demands, demand 1, demand number 2. What's going to happen to this one, right? Clean, right? Take it out just to get triggered on the lower areas of buy. If you draw a Kinehashi, you'll see how I structured this zone, right? We had a doji candle here. That's why it's a slightly bigger demand, but it's important to keep track of that. Otherwise, you're screwed, right? So markets did exactly that. And then I said, I guess, in these areas that markets are going to bounce up here, and then we might see potential downside, right? And personally, for me, I don't think my mind has changed. You can actually see that markets have done exactly what we speculated on, come up, hit, and now on Friday with our first red day. The only reason why I'm no longer that excited about a strong push to the downside, I might as well remove this area as well. The only reason why I'm not too excited about that is because I fundamentally believe oil is going to slow down. So it might go up a little bit, but it's not going to be that crazy oil that we saw. It's already done its job, right? And if oil starts to slow down, then rotationally wise, CAD as an economy, as a currency, will also start to slow down quite a bit, right? So, this thing going up is based on the fact that the dollar is strong and not that CAD is strong, right? So right now, if you want this thing to go up, you want a strong dollar and a weak CAD. And my argument is you will get a weak CAD if we get a weaker oil or a range in oil. Right, oil that's doing nothing for about a week to 2 weeks, or a range in oil. So watch out for that. And if markets were to rally all the way up there, then we might have to start to consider what to do. But all the evidence right now is pointing to a strong dollar, as we've kind of like seen on the DXY chart. The question is there enough structure to hold price here, right? You can see you've got this breakout structure. You've got a lot of retail traders who might be wanting to trade this as a resistance. There's going to be a lot of money in the zone here. But by Tuesday, there'll be clarity about the direction of price, right? But this is, kind of like just a typical trade. Right now, I'm pretty much going to do nothing in this market. It's another important thing to kind of like bring to the table. let's see. I really don't see anything to significantly do. I mean, the sell worked well. There might be a fresh touch somewhere up, all the way up there. If you just give me 2 seconds to find it, right? I'm on the H4 time frame right now. Okay, that's already done. Right, so if markets clear the zone, right? If markets go a little bit higher, which they probably will. Let's go to the 2-hour time frame. No more candlesticks, right? So this is brilliant sell, right? You get a clean imbalance, nice, and then markets just coming here, to wish you well, right? And this was a very good trade. I honestly I don't want to lie, it's a very good trade, but I can't see markets coming back. Well, if markets come back here, I can't take that trade. Let me put it that way. I'm not going to risk any money. It could work, but I don't think we're going to have a nice clean drop like we did last time. So let's just be mindful of that. So this is a market that for now, unfortunately, I'm going to stay away from until I get clarity. I don't want to waste too much time looking for something that's not there for me. EURCAD as quickly as possible. EURCAD. Oh, by the way, if you're still here, it means there's something that I've said that you like or that you're liking. So please express that by liking the video. I would appreciate that. Let's try and get YouTube to push our content out, because when our content goes out, we actually replace the garbage out there in the world. And also, it's I would thoroughly appreciate it. Oh yeah, by the way, this is a good, we're in this. There's nothing to do now. There's really nothing to do. I hope you guys are in, because this is like a very recent war that we just did together, right? Very clean trade. Markets did kind of go up Thursday, Friday, but I really think it's going to be complicated 365 candles. But only time will tell. But if it is complicated 365 candles, then we're going to get a new supply somewhere here. And if that's the case, you just wait for an imbalance. Those of you know the imbalance rule, and you allow markets to give you some volume, and then you're going to take another sell there. But only if it becomes a valid supply. Right now, there's nothing to do on this particular chart. In terms of buying EURCAD, I'm nowhere close to even considering that right now. All right, same thing, markets on the other side of a trend line. This is what USDCAD could look like in the future, right? If the dollar fails and CAD starts to strengthen, right? Markets could keep falling, break of structure type of thing, right? So this area is marked red here because I don't want to buy into it, right? I don't think it's going to be a strong place to buy. It's got remnants of a demand, but I don't think there's going to be enough buy volume there, right? So that's why it's marked red. At some point, markets might equalize out, and then there is another, interesting place to kind of like wait for price. For me, in the sell, this would be like a nice, good place for profit target, right? So this is kind of like TP1 and 2 will probably, I'm going to close them just before we get up here. TP3, I'm going to break even and just assume I don't even have that trade running until it gets all the way somewhere down there, right? And that's kind of like this how, I've taught you guys to play it multiple times, right? So that's EURCAD done. EURNZD, I don't even know why it's on this list because we looked at it last week. I don't want to repeat stuff we looked at, right? But these are the kind of like the trades that I just didn't close after Q1, so that's why they're still on the table for me. Right? There are some trades I closed. These are EURNZD, EURCAD, EURAUD. All those long drops that we had from the previous war rooms that are still running. I let them be, right? So this is where I think our next play should be on the daily time frame. EURNZD is the only supply with multiple confluence zones. So definitely, why not, right? We need it. We need that supply area there. Right now, we've got the short-term cowboy trade. If you took profits, good for you. If you haven't taken profits, please take. So cowboy trade, as said in the previous war room, it's marked in red. You know what? When I mark it in red, just know it's a high-risk area. And if you take a trade, it works like that, right? You should have exited here by now, right? If you haven't exited here, please exit quickly. That's my humble opinion, not financial advice. But I do think that, you might get stuck holding a sell in the middle of very determined bulls, right? And that could work against you, right? So the next time we want to sell is somewhere up there. The next time I want to sell like crazy is up there. And I really hope that markets get up there sooner rather than later. It's a good place to wait, right? So first here, there. We could do cool things, man. We could draw our Fibonacci's, we could get out some confluence, we could get some confirmation tools going. I'm sure we've done it in the past together. That's why it's marked already. There you go. Golden ratio area. You know, I never ever leave the house without my Fibonacci, right? So this is actually a good trade to wait for. This was nice money to build capital, short-term, you know, swing trade. But nonetheless, you got the exact same thing in pound NZD. It's not today's charts, by the way, pound NZD, but we spoke about it in last week's war room video, right? Pound NZD, very similar, following the same footsteps, right? So you want to wait somewhere up there. There you go, right? This zone is where Euro NZD is right now, and we now know that, you know, markets might go down a little bit first. Good, that's going to happen, right? So this is kind of like where you want to sell in the yellow zone, right? So just be mindful of that. This is a little bit risky for pound NZD. Markets could just get here and still remain bullish up until they go all the way up there, just to save on time, right? So rather wait for a perfect sell setup. You only want to be really train yourself to just only seek out high probability setups, right? Respect your capital. Your capital will respect you, right? EURGBP, I think we spoke about this, but I just can't remember when or why or what's going on, right? So let's actually quickly zoom out with the one clean sale, right? Let me let that go, and then, you know, I'm not in this market now, so can you do a top-down analysis just to refresh my mind? Remember EURJPY, USDJPY, pound JPY, monetary divergence policy. That I remember we're speaking about these things, right? So JPY wants to go down, keep their currency cheap. Aggressive countries like Europe and like London, Euro, ECB, right? European Central Bank and the Bank of England, representing the pound, have been very aggressive with their interest rates, right? So they are strengthening those currencies as they drop the yen, right? So just be very, very mindful of that going on here, right? So this is EURJPY on the monthly time frame, very beautiful, you know, equally arriving at the supply, but filling the entire order block, right? This is brutal, right? There are no sellers left. So what I would expect to see now is market efficiencies being filled to the upside, right? So we might get plays like this in the near future for the next 2 to 3 months. Who cares, you know, or not who cares, but, you know, something like that. Now let's mark up the next immediate area of value. It's a concept we always talk about in the academy. You kind of like want to know where your immediate areas of value are, right? This is interesting. You get, it's not even a major, it's an original term, an original supply, number one. It's supply and demand, number 5, turning point, but the area of value is an original supply, right? You know, as taught in module 1. And if you look very carefully, you know, markets did come back to make sure that they kind of like drain that zone just a little bit with a fresh touch and a big drop. And since then, markets have not returned. So this is going to be a nice zone. I really believe it's going to be a very, very good zone. You know how slightly deeper our retest zones can be, number 1. Number 2, we also know how far, you know, markets can travel with our retest zones, right? So if the chart's not yet clear for you, I'll clear it up for you. Just give me a second. Right, so that's a Kinihashi. That's what it looks like with a Kinihashi, and you know, I can respect that. But as a retail trader, you know, because I need to watch my risk assessment of my accounts, this is what I have here. Number 1, number 2, it's a good strong red candle, but it's not the strongest imbalance. Don't forget the imbalance rule, right? So just take note of that. That's why I'll suggest you tighten it. If you sell like this, you know, with an area that didn't even give you a very good strong imbalance, you could be selling too early, which is too low, and then you get punished. So you want your stop loss as close, you want your entry point as close to your stop loss in a weird way as possible, right? So, you know, there's a lot of potential for buying right now, right? All we have to do is to ensure that there is no more supply here. I suspect there isn't, but you won't know until you don't zoom out, until you zoom in, sorry. So please, traders, always zoom in if you're not sure, right? So first of all, we need to make sure that the supply is drawn as accurately as possible, right? So I'm trying to match it to that red wick over there, and you can see that's perfectly drawn, right? Clean red wick. And then I want to see what happened here. Now, if I zoom in again, I don't know if you can see it on your side, but on my side, we definitely have a supply that's broken. Remember, that's what happened with oil a year before the war, right? I kept saying, I think it was Liz who did us a great oil analysis in one of our classes. I'll never forget, because she had just joined. So I was like, and just finished the course. I was like, yes, that's how you apply it. It was a very good trade from a student, right? Same thing here. Like, you can see the supply has been taken out. Why are you doing that? Right there, right? So somewhere in there, the supply has been taken out. The green wick is outside the yellow zone, right? I'm really hoping you guys can see this. The green wick is outside the yellow zone, right? So there's no supply to speak about, right? So that's why, once again, I'm saying, you know, EURJPY is maintaining monetary policy divergence, which makes it a strong buy trade. So then we go find the setups for a strong buy trade. We're going to drop down time and time again. You know, we've got a weekly. We've got the old sell that did well, fine, right? But now we need to find our own buys, right? So on the weekly time frame, it's not looking good in the sense that, you know, the only confluence with the buy is all the way down there, right? All the way down to those, you know, March levels, right? Which is not too bad, not too far. But, you know, markets might be in a rush to go up. So let's just double check, right? So I'm going to clean up this chart a bit, remove this line, remove that, remove this, remove a broken supply, all right? So remove the red line as well. We no longer need it, right? Remember when we're trying to sell here, just so we're all clear, right? This sell here did wonders for us, right? Very good money. They also did, I'm just going to remove that there. But all of this is done now, right? So now we want to find the most realistic, reasonable area of demand, right? So I'm going to use a tool first of all, you know, pull out the golden age, right? And just see from the swing low down there to this potential swing high that's going on. You'll see my Fibonacci is stripped of those PCP levels. There's nothing wrong with them. I just no longer trade them, right? You know, every year I look at my data and I realize, look, man, I never catch those PCPs because I'm a set and forget trader. That's why I don't have them. Like they're much more for traders who use market execution. I like using pending orders, right? So that's number one. Number two, inside this particular area, inside the golden ratio, there is an order block, but it's really far. And potentially that's a good thing, you know, that this really could be a good thing. Right, excuse me for a second, right? So, okay, not much volume there, right? So that's a potentially good place to wait for a pullback buy, but that's going to take a lot of patience. The next place to wait is just above the 50% order block, which is literally where a lot of retail traders are going to be buying. But more importantly, keep note of how strategic this area of value is placed. This is the buy order block, this one here that we've just, you know, drawn up, that actually removed, you know, this, you know, equalizing supply, right? And the supply on top of it, right? This is a very strong buy area. Because of that, an area of value that takes out an opposing area of value is generally deemed strong, right? So this is a very good place to also take a risk, right? And that's what I think I'm going to do. I'm going to have 2 pending orders so that I never have a situation where I need to remember what to do. And because my priority is always risk management, I know for a fact that losing one trade won't change my world, right? It won't change my financial status in any case. There's not a single trade that I bet my entire life on, right? All of these are carefully divided to my maximum pain and risk management on what is my maximum pain, which is literally always 5% of my capital, maximum pain, and 5% of that, you know. And I've shown you guys many times how to do that. So this is it. So this is what we have here on EURGBP. And if I do get this, then obviously as a swing trade, you know, this is all I'm hoping for. I'm praying to get triggered, and I'm praying we rock. And then if I get triggered and I catch it on time before markets move against me, then I'm gonna try and get triggered again there, just for the same thing, because really markets have a lot of room to go onto the upside before we even start to think about any type of selling. So that was EURGBP. We've got actually 3 more charts left, ladies and gentlemen. Appreciate your patience. Appreciate for all the likes. Thank you for those of you who subscribe. By the way, those of you who I promised to buy Ray Dalio's book, I didn't forget. You know, I have your list down Anyone wants to get that book, don't forget you can share. What do you have to share? I don't know. You have to share something 365. To be honest with you, I'd very much prefer people share the course upgrade video, but whatever you want to say about the academy, just share it, send me a screenshot, and I'll get you a copy of Ray's book. Right, I've read all of Ray's work. Ray is just a thorough economic historian, and there's a lot of power in that. Right, but please don't worry, it's not forgotten. I'll make maybe Monday, tomorrow, I'll make purchases, or tonight. Right, so on the weekly time frame of Euro AUD, I'm not in, there's nothing going on, and I'm waiting to sell up there. Right, I don't think we should waste any more time. Right, Euro AUD, for those of you who want a new entry, right? So I haven't had a new entry in a long time. I'm not in on the recent analysis, right? Euro AUD was a quick runner. But what we want to do is want to build positions, right? So this is a nice place to talk about, which we spoke about in those of you who used to attend my London session mornings. That's why, sometimes I get confused. If you come to these charts here on the 1 hour time frame, 2 hour time frame, there we go, right? So this London session trades, these ones here, this is clean. Those are beautiful, cowboy high risk trade that markets are running into. And then, there's a lot going on here in the gray area that we spoke about as well, that markets never made it all the way up there. But this was also clean. So that's why I'm saying, if you're looking for re-entries or it's your first time wanting to get into Euro AUD, right? The reason why I didn't want to close this stuff, for the first financial quarter profit run is fundamentally because, there's still a lot of downside, or at least potential more downside. We like to hold our trades governing supply to governing demand, right? And so there's still a bit. It looks small on the chart there, but if you really look at it carefully, right, that's almost 400 pips, still waiting to play. So that's almost like potentially one more month to drop, at least depending on how this candlestick is going to go, right? And then after that, you have to consider the fact that all these demands that markets might stop by are inside broken structure. What does this mean? It means, well, then Euro AUD might be, setting itself, for disaster, right? It might be preparing itself to create a new all-time low, right? So who knows, or at least stop somewhere there. But this is the lowest that markets would have been, in the history of being low, right? So that's why I actually want to see what's going to happen. But I do admit that there is a good demand ahead, but it is 400 and something pips, almost 400 something pips away. So it's not really, the most immediate, type of concern that I have, right? So there could be potential, right? So if you trust this there, right, that could happen. Or if you trust that there, that could happen. Or if you trust that there, that could happen. Every week, we'll take it week by week. As long as I'm still in it, I'll keep having a look with it to you on Sunday. But if you wanted to start placing some pending orders, I would definitely suggest you go to the H4 time frame and you look for unfilled orders first, fresh areas of value first, right? So this is the reason why we took this one. It made sense. It was a nice, clean, fresh area of value. Markets didn't make it here, and then markets ran, breaking, all these, break of market structure. Day traders and short-term swing traders very soon will be looking out to make moves there. Here, and a deeper retest there, right? So, and that's what you need to, kind of like make sense of as a trader. Like I said, you really want to prioritize fresh areas of value. Something like this is a very fresh area of value, but it carries a little bit of risk because now you're now in the low part of the curve, right? So I'm going to mark this red so that we are all on the same page. But if you were to use a Fibonacci, just looking at the market legs, right? The latest, swing high, swing low, you'll notice, if I can just quickly correct this. Oh, come on, man. Right, so somewhere there, I don't know if I'm right. So I'm just gonna do it, just one more. There we go, perfect. Right, so you'll notice that, this cowboy area that I'm referring to, once again, is in the golden ratio area, right? But be careful, there's more to it than what meets the eye, right? There's a slightly higher supply just above it, right? So we know that markets could create a body here, but they will wick you out. They will wick you out and trigger your stop loss because of where you placed yourself. So if you're not weak, if number one, you're weak, you don't want to get missed out on, right? It means you have to sell right there at the beginning, but your stop loss has to be wide to cover both sell areas. Or number two, you just wait and you put a sell area just within sell number one, something like that, so that you're covering the highest sell point, but also covering the entry point without necessarily jeopardizing the trade, right? So your stop loss would be somewhere up there, covering the highest supply between the two. And if you lose this trade, at least you know that it was due to something that you didn't know about, and not due to like poor analysis, right? There is a better supply up there, but it's not fresh. So here I'm looking for something that reeks of something close to being fresh. That's Euro AUD. I'm gonna leave that trade there. Yeah, okay. The book, I'm just craving for it. All right, Caleb. I hear you, man. It's coming. I promise you. Now, Caleb is asking a question, saying, "Look, man, let me write this down. There's a video that I did for you guys. I just haven't uploaded it. Believe you me, I do a lot of recordings. Some I don't like, so I don't upload. But this one I do like. I'm just gonna write this down quickly on my notebook. Market cycles. I'm gonna do an education video on market cycles on the channel. It's right now. It's in the deadline of this week. So hopefully I'll get it done out there and I'll publish it. Just need to upload anyways. And you'll learn more about market cycles. When Ray Donovan talks about market cycles, and he's bigger. His perspective is bigger than mine. All right. So I look at 10-year plans. So that's how central banks think. But he's looking at the construction of capitalism, so to speak. So he's looking at a 250-year span, and in there, 3 big stages that he spoke about in the video. So Caleb, a lot of the times you'll start to see the cycle within a bigger cycle. As his cycles are within like 20-year plans, right? Normally 2 decades at a time, roughly speaking, if I can answer your question directly. But I think for retail traders and retail investors, it's almost easier to wrap our minds around a 10-year low, right? The other thing that I wanted to bring up, if you go to the public Telegram group, I did this, but on the 15th and maybe I'll find it in our public Telegram group. I'm not entirely sure, but on the 15th of March or something, the public Telegram group, because this just sparked, something in my head. I sent you guys a well put together, I guess graph or something that actually was tracking how long Russia has been planning to kind of like, buy to back its currency on gold, right? So that's the last thing I forgot to mention. Russia is not backing its currency on gold because of some Weasley plan due to the impact or lack of impact of the war. That's not what Russia is doing. Russia, guys, for the last decade, actually, and Ray Dalio decades, so 2 decades, for the last 20 years, if I'm not mistaken, if I can find it in the background, I'll point it out. But Russia has been buying gold specifically from the West. Russia has the highest gold reserves. And one of the things that they claimed was that they actually want people to buy their oil in gold now, right? And that's where traders thought gold was going to explode. It will explode based on supply and demand, is my point. But here's our public Telegram group. I just quickly did a search here on Russia, and here it is. I posted this out to you guys. Since the early 2000s, 2000 plus 10 years is 2010 plus 2021. That's 20 years. Russia has bought net gold buyers, right? Remember, Ray Dalio's argument is there's a change in world order, and China is going to lead it. And look who, these are the only 2 people who now own the most gold in the world. Gold is finite. It finishes, right? Like Bitcoin is finite. Assets that have a strict supply, when the demand goes up, they increase. And who are they buying from? When you're buying something, there's someone has to be selling it. Net gold sellers. It takes so much time to extract such beautiful data. When I share this data with you, please use it. So check this out. It's the West, United Kingdom, Spain, ECB, Netherlands, IMF, France, and Switzerland are the highest sellers of gold in that time period. The same people now issuing sanctions to Russia, who can't control China, are the same people who are selling, without even knowing these people's 10 to 20-year plans, the gold. And now these guys are like, you can remove us from the SWIFT. We don't care about your global standards of currencies. We're just going to back our ruble against all the gold because now we own most of the gold. It's very possible, right? Most currencies are backed by some unit of gold. Gold, by the way, found in Africa, even though Africa doesn't have that same privilege, right? The irony, right? What you're talking about, Mentor, was also in Jim. Yes, you've read Currency Wars, man. Did you see that book? Jim talks about the war, the Ukraine war, and he freaking wrote that book in 2015. Yes, please. I mean, I'm happy. Someone is actually reading. Shake my hand, Mr. Ambassador. Absolutely. The guy. So the point here, guys, is when someone says markets are not random, it's a nice way to feel good about yourself. When people say markets are predictable, you can read charts, you can predict the future. Those people they're nursing their wounds, the wounds of insecurity, incompetence. I'm not trying to sound arrogant, but if you can't read charts, don't go around telling people that you can't, right? These things are planned. Because they are planned, markets print the blueprint of that plan, the flow of money, what we like to refer to as market profiles, right? And Jim Richards talks about this. This is absolutely, so Currency Wars is a great book, right? Dario has mapped this out. This is absolutely dope, right? Thank you. I'm ending the session on a high note. I love it when people are learning, because then I know that I've done my job. My job isn't to kind of like carry everyone forever. My job is to inspire and show you guys the road so you can go out there and make your money however you see fit, right? Not that when Leroy stops doing this, nobody else can make money. That's not, 365 would have failed, right? So fantastic, guys. NZDUSD. Caleb, I hope I answered your question there. Right, so NZDUSD, let me put that back there, that little circle, and then let's quickly do a big time analysis and check up what's going on here. All right, so I'm going to delete the Fibonacci because I can't actually see what's going on. Right, there we go. I'm going to delete these weird arrows. I was just simply pointing where the demand is most likely going to be. You can see we have a bullish engulfing pattern there. We can actually draw a rectangle, make it a little bit clean. Right, complicated. 1, 2, 3. Draw the low of the wicks. You know everything that I taught you. Markets bounced in there. Right, and we've got this descending almost channels or triangles, whatever. Got a whole lot of supplies at the top. FOMC 16 area. We came back to where the dollar was going up the other year. This is where NZD was going down. 16th of June, FOMC meeting last week. I'm gonna drop one time frame now just to get more clarity. Right, so bearish engulfing was broken by this pattern here. I mean, I would want to draw this demand like this on the weekly, but I can't ignore the fact that on the governing time frame it's like this. But it's important to say that, okay, fine, that's fine, but there was a demand in here that absolutely failed. I think it's important to note that it didn't fully break the governing demand, but it definitely went all the way deep inside, right? And it failed, right? And then it's important to note that there's something going on somewhere here, and then after this is done, there's nothing all the way down there, right? And then, there's really not much. Channels, nothing here, right? So on the weekly time frame, there's really no supply to hang on to right now until we get maybe to the daily, which is this one. Right, so markets came all the way up there and then dropped it. I'm not in any of these trades, which is such a big regret. This would have been nice to trade. This would have been absolutely nice to trade, but missed it. Right, and then what happened is, I guess somewhere here, these were supplies that I thought I would take. Maybe I got distracted, didn't even take them. But thank God, because markets did drop a little bit, but didn't last long. Went up, also came back down. But I don't think there will be one of those trades where someone will say, I'm in profits, but how much? Like, did you really make money? Like, how far did price leave, right? So markets really seem to have removed all these lower supplies along the way and kind of like bounce there, right? So what to do now with this particular chart, man? I mean, a little bit hurt that I missed this. I don't know if anyone in the academy is in it. I haven't seen NZDUSD in the senior traders room chatter in a long time. So I really don't know who's in it, right? If you're in it, very well done. Good for you. In terms of the daily time frame, right, the couple of multiple demands there, the lowest of them is all the way down there. But as markets were feeding into this area, into the governing cell area, you can see that they started to create their own. And we've got a very steep, choppy, upward trend, right? So for me, guys, there's nothing. There's no desire to be in this market at all right now, except for the fact that I wish I could turn the hands of time and come back here. I could get intraday plays, right? So if you want to get intraday plays, you just follow the trend. Simple. H4, I can see once too obvious, so I'd avoid it. Let's see if we can get a cleaner 2 hour. So choppy, man. Choppy. Right, so maybe here. Right, I'm still with you. I'm just waiting for whatever my computer is. So somewhere there will be a good place to try for intraday. Listen to me carefully. Intraday to very short-term swing. I'm marking it red, right? It's a really, the closest thing. There are many plays. You are right if you want to try your luck, a little bit earlier than that. But I never take, easy sells because they always, most of the time, anyways, end up in serious liquidity range. So that's what's good. Mr. Ambassador, but I don't remember seeing your name in the Wealthy in 3 Years program. I don't at all. But because you're reading something as good as Currency Wars, I'm gonna give you a full year access. I'm just gonna write that down so I don't forget. I personally want to be an education academy, so I get excited when people are learning, and I really am happy. So, Mr. Mbasa, if you're not in the Wealthy in 3 Years program, I'm going to give you 1 full year for free, just because, simply because you're reading that, and I hope he's around for that announcement. I'm just really happy. That's amazing. The sooner you realize the stuff, guys, that it's there. It's not hard, but you have to learn. And the more you learn, the more you earn. I love it when people spend 2 to 3 years trying to master markets and not give up. Because those are the people who do 30 to 40 to 50 years of proper wealth. Like, I don't even consider myself wealthy. I feel like there's a whole world waiting out there. And so, yeah, so I'm very, very inspired. I don't remember ever talking about Currency Wars out loud in one of my videos. So for a student to have found the book somehow, some way, and is reading it, that's extremely inspiring, right? So I'm very happy about that. Right, okay, guys, so that's NZDUSD. Try your luck up there, and then you have to be very careful. Start taking profits. If you do the 3 entry thing, 50%, take profit 1, take profit 2, somewhere down there, take profit 3, break even. But there's no point. You might as well just close it all the way here, because we still have a governing demand at play. It's a little bit weak, as you can see for yourself, but it's still there. What could help guide take profit 3 if you really want to swing it is you want to find a break of structure, right? So you want to see where these higher highs and higher lows start to fail each other, right? So you've got something like that going on right now, right? So if this area is removed, right, which I hope it will be, then you want to be very careful how far you can swing your third one. But you can go as low as you want. Just bearing in mind that all these demands on the other side will try and stop you, but if you are patient enough, the retracement will end and price will come back down. The point here is to get in there, somewhere up there, fairly up 1 and 2 sells there. But yeah, the last chart, guys, is USD Swiss franc, and that's fundamentally because my last chart here was going to be NASDAQ 100, but I've already done that with you at the beginning of this war room. Once again, thank you so much for chilling with me. I appreciate you taking out the time. I'm always worried. I do pick up trends within, public space. People do take war rooms very lightly. I don't know why. If you look at your trading account, your trading balance, I don't know. Maybe you're making all the money, so you don't need the stuff. But for you guys who keep coming to show up, don't stop here. Show up for your accounts during the week. Show up in discipline. Show up with rule following. And take the damn trades that need to be taken. And don't be scared to lose if you're risking accurately, right? But don't be scared to swing if you're making enough money and there's good potential, right? So we had this, silly trade that we spoke about, I think 2 weeks ago or last week. simple supply to demand, even on the daily time frame, didn't offer much, right? Straight in there, less than 1:3, but still money is money, right? And then markets rated all the way up to the demand. I'm not in the buy. I just I want to see clarity with the dollar, but as usual, Swiss franc is going to remain weak. And so, while this sell was good to take, I promise you're going to see a week from now, you'll realize in hindsight, this buy was the better trade. This candlestick formation on all these greens, just please look at the pattern, look at the candles, look at the doji. I'll show you guys the stuff. If you spend time with your charts, you'll see the stuff. See this doji? Look at this. Then there's a big full candle. You see these green candles. Tell me if it's not the same thing here. It doesn't have to be exactly the same, guys, but tell me if it's not similar. Tell me if it's not similar. There's DXY, the dollar. You just need to find these things that correlate. See this dojis, full big candles following, and a little bit of a bottom. That's all it is. USD Swiss franc mirrors DXY most of the time, but only in times of rallies, right? Only in times of rallies, right? So that's what you got there. I mean, I could show you some cool stuff, but I guess we can end the day with this particular chart, right? So anyways, it's unfortunate that I was not in the buy, because I do believe there's going to be more money being made to the upside. That is to say, if DXY keeps running like it is, the supply is going to be taken out. Remember, Swiss franc is only as a predator, right? It's only strong when dollar is weak and extremely weak when dollar is strong, right? If we come here, I think I remember seeing something, USD Swiss franc. There you go, as usual, a lot of sell side, but look there, boom, positive, buy orders on the table. And historically, Swiss franc has been weak throughout, I mean, since. So I'm only 2 weeks behind here. That's amazing, right? But look at this. Most of the orders have just been sell, and it stayed afloat because they're not yet done with the buy orders. But the sentiment is a weaker Swiss franc, and so you just want to tailor your buys and sells accurately, right? So clean sell, but there'll be more money made on the buy side for those of you who entered down there on time, right? So until then, there's really not much to do here. What I'd like to see is break of supply and then catch a pullback, right? There's always going to be a pullback somewhere. Markets don't ever forget. Markets always come back. There's always an opportunity next week if you miss one this week. That is to say, for the trader with capital. Ladies and gentlemen, that is my time. That it has been a very good session. I appreciate you. We went through 12 charts. We spoke about a lot of sentiment. Look at the Russia gold thing, Bitcoin thing, Wealthy in 3 Years program. I encourage everyone who's not in these programs, take our traders course, 75% off. When the price goes off, please just remember, I kept saying this thing out loud. Wealthy in 3 Years program, 50% off. Get a lot of tokens. Basically, some insight into different parts of the world. The next one is going to be looking at DeFi specific tokens and Web 3.0 tokens, right? But I want to finish this metaverse theme. So you guys might actually get two Wealthy in 3 Years notes in the month of April, right? But don't pressure me. But I'm just saying, if I feel the need to, I'll drop them. Remember, don't get overwhelmed by the assets. You look at your pocket, you look at what you can invest in, you just simply dollar cost average into things that you might like, right? Remember, it's investing. Like, I'm just telling you where I think all the potential is, right? And if your trading starts to pick up, then you get more funds, you get more cash to start to invest more, right? But I want to be transparent with you to let you know what I'm buying, but don't be under pressure, right? So sometimes you get a list of 12 good crypto coins, right? And maybe let's do this right now for those of you around, but I will do another proper video. But you got 12 crypto coins and you only got $500 to spare, or $100, right? Some of my tokens are as cheap as 0.02 cents. So you can imagine $100 is a lot of like money, as long as you're going to hold. You're an early buyer, right? And if you start to dollar cost average 10, 20, 30, $40 per month into those very, very good, dirty, cheap runners, and if they do work out, right, you're gonna have a serious amount of X of money, right? So please don't get overwhelmed by the assets. I just I've been 70% cash for the last 3 months. And because of that, I need to dump my cash to start making me money. All right. So that's why if I feel like, okay, I want to invest a bit more, I'm going. Like the assets that I sent now, rolling 3 years, I'm going 35% of my cash is going to go into these notes, because already 30% of all my cash every day goes into classics like Bitcoin, Ethereum, Binance Coin, Litecoin, the first Oracle system, Chainlink, etc., right? So I'm spreading my money across evenly. All right, cool, Siri. I'll sort you out now. Just private message me on Telegram, right? Appreciate you guys. Shake my hand. See you during the week. There's going to be tutorial videos that are about to drop, so just look out for those. For those of you who need tutorials on Metaverse and creating MetaMask and all that kind of stuff, I'll put them up on the channel as well. But I thank you so much, guys. Shake my hand one more time, and I'll see you guys during the week. God bless. Take care. Peace.